Right, so Bassim, you have $2.2 million invested across your TFSA, your RRSP, your margin account. You do a ton of covered calls. So I want to talk to you about what you have. He does covered calls on Apple, Amazon, Google, Meta. I'm probably missing some, so we'll talk about that. I saw your video. I'll show the video on screen right now, where you talk about how you sell puts on SPY. By the way, everyone, everything I'm talking about today, he has a video on his channel. So you'll just go to his video after you watch this video and you can check it out. You were bullish on Tesla. You got early on SoFi. You're a Canadian who owns Air Canada. There's a lot to talk about here, but let's just break down every account you have. So TFSA, what you own, RRSP, what you own, and then your margin account, what you own. And everyone watching, check out the chapters, and I'll be showing every single stock in the bottom of the screen. So let's just jump right into it. You ready? Let's go.
I'm ready.
Oh my God, like you're hostage. I'm ready. Let's go. Okay, so 2.2 million, but in your margin account, when you're on your video, you said you have over $1 million and you're selling covered calls on Apple, 900 shares of Apple. This was as of a few months ago. You bought it at $75.25 per share. So overall, you put in $67,724, around there. You're up $145,000 on it, which is crazy. 250%. Let's talk about that.
Not bad, eh? So I got into Apple out of FOMO, or I guess jealousy. My friends worked at Apple when we were in university, and as part of their employment, they got Apple shares, and they got in at like $14 or $15. And then I wanted to get in as well, so that's when I started buying Apple shares. I think 2010, 2011. I built up the 900 exactly, mainly because I sell covered calls. But how I got into that was, I'll say, I think it was I bought 200 on my own, and then Apple had a series of splits, and then sometimes I think they had a 5-to-1 and a 7-to-1. They split a lot of times, and on the day of splitting, let's say 2021 or in 2020 in the summer, they went up 5% on that day and ended up losing the shares. So what I did, sometimes I would do a poor man's covered call, which is kind of, I think, like an advanced trader tactic where you buy a call where you control 100 shares and then you sell let's say a covered call against it. So in order to get my shares back, I would either get it back via the covered call strategy, let's say 2 years of a poor man's covered call, and then the remainder, I think 400 or 500, I got assigned. But I can't recall exactly because I've been investing in Apple for 14 or 15 years. I've been selling covered calls that whole time, but I started to get into the advanced trading ever since 2017, 2018, when I got more comfortable. And I found, like, I used to be in dividend stocks at the beginning as well, which you don't see here. I ended up selling all of it. The dividend stocks were too slow for me. As I got more comfortable into options trading, I started to allocate more and more in my portfolio. And now, I want to say I'm 100% an options trader, even though it doesn't show that because I own all these stocks.
I want to go backwards a little bit here because I'm looking at this 900 shares in your margin account. Can you explain margin accounts to anyone watching who's not aware? Because most people watching this are TFSA RRSP. They don't have margin accounts.
Yeah, so I would recommend everyone max out your TFSA and RRSP first. Margin is a taxable account. It's not my ideal choice, but they give you, I think Questrade gives you a 3-to-1. And then if you're on some other brokerages, they give you like a 6-to-1. It's basically, they give you additional leverage on what you put in. I don't recommend using it. Margin is how you blow up your account. But in a margin account is the only way you're able to do level 4 options trading, which is naked calls and naked puts. If someone tells you they sell a cash secured put, that's an advanced trading. I don't know, it's weird to call it advanced, but there's no such thing as a cash secured put. It's a naked put, and you conveniently have the money to cover your position. And I think you're only able to do that in a margin account, and it's a taxable account there. The CRA bans you from doing it in the TFSA or RRSP. So that's why I have a lot of money in the margin. I'm able to do more trading. I'm able to do more trades and more advanced trades and take more risk. And obviously I made more money because of that.
The downside's more though at the same time too, right?
Downside's way more. The issue is, the reason why I don't say downside, it's not really there for me because my full-time job, I'm an accountant. I'm always on a computer. So I have 3 screens, and one of my screens is the market, is the S&P 500. I'm always monitoring it. I'm always watching. Let's say if I'm selling puts on the S&P 500, if it goes down to zero, that's my max loss. Do I think the market, the top 500 companies in the US would go to zero? No.
No.
So that's why it is risky, but the more you trade or the more you know, like to me, it's not risky. If that makes sense.
How long you been doing that for, you said? Using this margin
So
account?
I'll say since 2011, since I graduated university, I learned
Okay.
about it. I learned about options trading as part of my university degree to become an accountant. My professor was an options trader and he would trade in front of us like in class because I think it was between 9 to 5. So he would show us what he was doing. And that's how I jumped into it. So I think my first options trade was I had 100 shares of TD Bank. They pay a
Yeah.
5% dividend a year. 5% was too slow for me. So I tried to sell monthly covered calls on TD Bank and I turned the 5% dividend indirectly into a 10% dividend, if that
Wow.
makes sense.
And for the margin account, so it really only makes sense for short-term trading, for like covered calls, options trading like you're doing, right? That's like the only time someone should be leveraging that kind of account.
Yeah, I
Like,
guess like there's in Quest Trade, like there's no such thing as a non-margin account. So if you ask for a cash account, they'll give you margin anyway, but it is your taxable
oh,
account. So I wouldn't tell anyone to invest in it. Do your TFSA, FHSA, or RSP first. Save the tax because I'm paying a lot on my margin on my options trading because it's a taxable account. So try to
yeah.
shelter from the taxman first.
All right. Let's move on to SPY, S&P 500, 900 shares. This is also in your margin account, $383.27 per share. So you put in 344,000, you're at 542,000, so you're up $197,000. Pretty good. So you're selling puts on that though. That's what I saw in your video.
Yeah, so I was the reason why I had 900 shares. I sold 9 puts, and the S&P 500 dropped, and I ended up getting assigned. So that's the risk. If you're on margin, someone forced me to buy 900 shares off of them, and if you don't have the cash, that's how you blow up your account. Thankfully, I had the cash,
Yeah.
but yeah, so I can make it a little more. I can make it a little more risky. So I sold 1,500 shares worth of puts. I didn't have the cash for 1,500 shares. So that's why you see the 900 there. So I sold 600 kind of at a loss while it was going down. And then I accepted assignment on the rest. And once I took the shares, I was just basically doing a strategy called running the wheel, where once you take the shares, you in turn sell covered calls on it. And then eventually you could lose the shares or you could not. But like there, if people have been watching my videos from the beginning, there might be a little confusion where I say I don't want to own shares anymore. Um, in 2024 or like end of 2023, 2024, the market has been going up so much that I didn't know what to do anymore. And I
Mm,
ended up just owning the shares because the market was going up more than what I was making. So my average return is like 18, 19% when the S&P 500 average is like 10, 11. But then
yeah.
the S&P 500 went up 24% and then
Yeah.
25%. I wasn't doing as well as what the market was doing. I also like as a trader, you try to predict what's happening. I do short-term plays. I do like 30-day trades. And for a while there, everything I was doing was wrong. Like the market just kept going up. It didn't make
Yeah.
sense to go up 25% in a year. So that's why I just ended up holding the shares because I think the market is overvalued now, but the market can stay overvalued longer than I can stay solvent. So
Yeah.
I'm just holding the shares and selling covered calls.
I got some questions about this because this is such a it seems like such a stressful strategy you're employing to beat the market. Like selling like options and covered calls, leveraging a margin account and doing all this to beat the market. Cause that's great. Like you're trying to beat the market. I think you're trying to beat the 11%. You're coming in at 20, which is fantastic. Um, I'm just trying to think through like I know what I do, and I just want to talk to you about what I like. I don't do covered calls at all. I'm thinking about getting covered call ETFs, and that's in a previous video. I've talked about this to death. But what I do is I find individual stocks. I don't sell calls on them that I think are severely undervalued, and then I go, yeah, this is going to be the market this year or for the next 5 years, and then I just dump into that and I sit and I wait. I just Warren Buffett everything. I just find super undervalued stocks, dump a lot of money into it, and that's how I beat the market. Like I'm not doing this sort of like 30-day cycle and stuff. How are you? Are you stressed out at all when you're doing this? Because you're working as well. You're doing about you like you said you have 3 screens. How are you managing that? Like I would feel a little. in my brain would feel a little bit flustered at times if I'm multitasking and then doing this at the same time.
So it's different for me. So if I could be a full-time trader, I'd be the happiest person in the world.
Yeah.
Um, I don't have to think about it. Like, I know that's so weird to say, but I have it in the back of my mind. Like, I've been doing it for 14, 15 years now. I don't
Yeah.
have to think about it. It's just, it comes naturally to me. I'm like, what I'm doing to me is not stressful because, like, let's say I'll own the same shares you're owning, but then every 30 days, I'm just selling a covered call 10% above what it's currently worth and trying to make a few $100. Like I try to make 1.5% per month on it. So then over
Oh,
12 months, it's like 18. So to me, because I've been doing it for so long and it comes second nature, it is not stressful. There are
yeah.
times like after the tariffs came out and then the market went down, was going down every day. I thought like, hey, are we going to be in a slump for a few years?
Yeah.
Because then obviously you see, I was going to go from I think I went from a $2.2 million Canadian dollar portfolio to 1.8 or 1.7, and that happened in a month. So
Hmm.
that was stressful.
Yeah. Yeah. Of course.
Yeah.
I'm sort of numb to that now. To be honest, like I had something similar happen to me. I bought a bunch of stuff right after New Year's. And I was like, Jesus Christ. And like April happened. But at the same time, I always tell people if possible, keep a lot of cash on hand. I just wait for these things to happen where like the market crashes so then I can capitalize on it. So for me, I wasn't even seeing it as a negative because I know it's going to bounce back to all time highs again. Give it a couple years, so that'll correct, and then just have enough cash on hand where you can capitalize on that crash. So I didn't really see it as too bad of a thing. I think it'd be horrible if you're someone retiring this year, though. If you're someone
Yeah,
in, yeah,
the timing is everything. But then I think people would have told you if you're retiring this year, you shouldn't hold that much stocks, right? You should be switching
yeah,
to bonds or fixed income slowly.
yeah. Like over the last 5 years, it would have started the transition, anyways. Okay, that's your margin account. Let's talk about something that people, and this is, I had a question about this, and I think you can clear this up. So in your TFSA, you're doing covered calls in your TFSA, right?
Correct.
Is
Yes.
there, so when you're, but you're technically, aren't you selling shares at some point when you're doing that? When you're doing covered calls?
Yes.
Couldn't you get
If you
flagged?
yeah, if your shares get called away, so there's no hard set rule as what constitutes like day trading or
Yeah.
um, yeah, so that you can try to make an additional amount of income or just turn a business in your tax-free savings account. But what I do, I turn it into a dividend, meaning I sell 30-day covered calls. So if you're getting a dividend from a REIT every 30 days, I'm getting money from a covered call every 30 days as well. So I've been doing
Yeah.
this for 13 years in my TFSA and I haven't been flagged yet. So I think selling options every 30 days in your TFSA, to me, I think is free. If you're doing it weekly or daily, that'll get you flagged. But I'm
Okay.
doing every 30 days.
That's what caught my interest. I was thinking, because I've thought about this and I'm going, oh, I'm just going to get flagged. I get nervous nowadays. Like, I'm doing everything cool, government. So don't look at me. But like, I get so nervous sometimes talking about it. But like, in my TFSA, I was like, you seem like you're doing it a lot. Okay, let's talk about what you own in your TFSA, and then let's break it down. And it's pretty simple. You have VFV, you have Apple, again, you love Apple, and then you have Palantir Technologies. So VFV, I'll just break down each one. So you have 286 shares. You got it $73.60 per share. So $21,000 in, $42,000 right now. So you're up $21,000. Okay, so are you just buying and holding VFV, or are you doing stuff with that as well?
Yeah, that was buying and holding. So I didn't want to convert to USD and then buy SPY. Like
Yeah.
I didn't want to lose any conversion. When I'm selling options, I earn USD. So that's why it helped me build this large USD portfolio. So the crazy part is, I know I'm going off on a tangent. I put in around to build this portfolio, I put in around 380 or $400,000 in Canadian dollars. But then when I sell options, I'm earning USD. So I'm getting a free conversion
Mhm.
indirectly. Um,
Oh,
yeah,
nice,
so
nice,
there's
nice, nice.
that. So I didn't want to lose the 2% like conversion that Questrade charges you. So I ended up
Yeah.
buying VFV just because it's the FX unhedged of the S&P 500. And I'm just like, if I have some extra cash for every $7,000 that you get at the beginning of the year, I'll just throw that into it.
You ever tried to do Norbert's Gambit? Like I know Canadian T-shirt has a video on that, and he does it. And I think he does it in TFSA, and I think Quest Trade you can do it through them. Do you ever tried that?
Yeah, yeah, but now they have this new rule where you can. They have this. I didn't learn the new process how to
Yeah.
Norbert's Gambit. Like you can journal yourself, but it takes 4 or 5 days, and I think I'm over it. I don't know.
Yeah, same.
I'm over it because like I put 7,000 at a time. I don't want to
Yeah.
put the effort to save the money on 7,000. But if I do
Yeah.
50 or 100, then I would do it.
Exact situation I'm in right now too. And anyone wondering Norbert's Gambit, I don't have a video on it. Do you have a video on Norbert's Gambit at all? Okay, so go to his channel, type in Norbert's Gambit, and you can just figure out how to do it.
Okay.
That's the easiest way, but it's essentially a way to get U.S. currency. You don't basically avoid the conversion fee. And same thing as you. I was doing it. I was like, I just can't do this anymore. So unless it's a large lump sum, I don't really even consider it now. And I did the same thing, VFV in my TFSA as well, just so I didn't have to do it anymore. Okay,
Perfect.
next thing is Apple. In your TFSA, you have 600 shares. You have it at $70.67 per share. So $42,000 in, $142,000 right now. $142,000 set right now. So you're up $100,000. That was a good one, hey? That
Yeah,
was really good.
I've been pretty lucky, mainly because Warren Buffett has it, and I feel like he knows what he's doing a little more than what I do. And this
Yeah,
comes in at the same time as the FOMO when my friends were buying. I started buying Apple as well, and yeah, so it kept splitting at a certain point. So if you had like 10 shares, I think in the end you can have 150 just because they split so many times. And over 14 years, buy and hold is the strategy. Like I like what you're doing, buy and holding for 5 years. But when you do it over 14, 15 years now, it adds up. So I'm feeling pretty good.
yeah, that's a good one. Another one you got in. Do you get in early on this? Palantir, PLTR, Palantir Technology, 800 shares, $12.35 per share. This is crazy. So $9,880 you put in, you're at $53,000, $53,664. So you're up $43,000 and $700. That's
Okay.
$43,000 you're up.
So here's the thing. This is why it's such a conveniently timed video and like so deceiving, maybe of what I
It'll
did.
drop.
Yeah, if you look at the last 3 years, so I bought Palantir when they first went public. So let's say a few days later, I bought it at like $12. They went to
Mhm.
$6 for 2 or 3 years. I was
Yeah.
sitting on a massive loss, and I'm so stubborn, I didn't want to sell because I kind of had a feeling it would come back. Like I didn't have any good reason for it to come back. And then just look at the last 6 or 7 months where they went from $12 to 120. So I don't own them anymore. So I ended up selling in 2025. But it's just convenient timing that I showed you guys that video, right when I went up 400% on a stock, or I think 10x on a stock. But for 3 years, I was at a 50% loss. So it was hard.
Do you think you didn't sell because you bought in at a weird number? So you spent $9,880, which was not large enough for you to have a panic attack and go, oh my God, but not small enough for you just to liquidate really quick and forget about. It was like it's into this weird sweet spot where it's kind of big, kind of small. We're like, I might as well just hold on to it and see what happens.
I think you're right. Like if I was in at 100,000 and I lost 50, like I would have sold long before. But to lose like I guess the 12,000, it didn't hurt that much to me because I think I make that in a month just trading options. But I'm happy I held. So here's the thing: like there's some other stocks that you'll see on there where I'm stubborn and I didn't sell, but it didn't work out the same way.
Yeah, and we're gonna talk about that too. Um, yeah, I'm looking at like I kind of feel like I get to know who you are looking at your portfolio and like your like habits and stuff. Because like first off, you're doing this covered call thing and you're doing it every 30 days, which means you like the game aspect of it to some element, right? Like you must like I don't think you could just sit there buy something like I'm gonna walk away now for 20 years and check back when I'm retired. It's like no, you wanna let's see if I can squeeze everything out of this. Let's see if I can beat the system, which is 11%, get 20 or more. You're finding you bought if you bought Palantir, you said when it went public. I don't buy anything when it goes public. Well, your risk tolerance is higher because I'm expecting public and then like right away. And
Yeah,
so
so I
some people,
guess
yeah.
I guess that happened. So I've always liked to buy things when they went public. I bought Facebook when it went public. I ended up selling
Oh
covered
shit.
calls on it, but it went up so much I lost the shares. Like someone
Yeah.
bought it off of me. I still made
Yeah.
a profit, but I would have made more if I held on to it. There's certain things like I would never buy, like Bumble. If you look at Bumble, I think the CEO should go to jail. Like it's down 95%. It was the biggest BS stock and BS like IPO that I've ever heard. Um,
Yeah.
I
You're not
had a feeling, or maybe just like my own, or maybe the people on Reddit just won me over, but I had a feeling about Palantir. I was right about that one, but we'll see some other ones that I was wrong about.
do you reference Reddit ever when you're looking at like I do my best to isolate myself when I'm deciding to buy stocks. So I stay off of Yahoo Finance if possible. I stay off of Reddit. I try not to let any it's hard though. Like sometimes people just make some compelling arguments or this the hype gets you. Go ahead.
So I stopped when I found out that companies pay for bots and people to post on Reddit. So everything that convinced me, I feel I was won over by those fake accounts and those bots. I was naive to think like, hey, someone did like a week's worth of due diligence on this. Hey, they did the work for me. Let me buy in. I'm convinced. I was naive to think that companies wouldn't do that. I don't do Reddit or look at Yahoo Finance anymore because those are for, and to me, those are fake.
Let me explain exactly. So we were talking. Maybe I'll include this now because I'm just gonna break. I'm gonna break the illusion of all that stuff. So I have an advertising background. I don't know how many people on my channel know this. I've worked in capital markets for years, for over half a decade. So working for publicly traded companies, helping them, get their message out there, right? And my strategy is very simple, right? You just put their company in front of the right users, be like, hey, this is what we offer. We're a great company. The end. A lot of companies, and I never did this, do that exactly what you said. So what they do is they create thousands and thousands of Reddit profiles, Discord channel type stuff. And the Reddit profiles they massage for like years, right? To get them all those karma points. And then they'll actually work with analysts in the field. The analyst will pay off whatever, $10,000, $20,000 to make a post on that company. Then they'll have all those fake profiles on Reddit from that have been outsourced coming in going, that's a fantastic post, and start pumping it. And they'll do that across every place where investors live. So they have a mixture of real person who's like an analyst, and then they flood that person with fake posts, creating the illusion of market hype. And what you'll see with those companies, it goes up. And then the people who bought in typically will be like, oh, great, it is doubled in like a week, and then they immediately sell, right? So
I'm
whenever
so
you
angry right now.
Yes. So that happens all the time. And this is from me. I don't really care. I don't do this and I don't like marketing companies who do this. So I don't mind breaking that illusion. But there's plenty of great companies that I know of, especially ETF companies never really do that. They don't have to. And that's why I always go like, just buy ETFs and be safe. Because I know if you see a penny stock and it's being pumped online and an analyst or someone ever talks about it and suddenly there's a bunch of comments, put on your skeptical hat. It's a marketing agency that's behind all that is, just trying to pump that stock. So that's why I kind of tell people don't believe everything you read online because there's a lot of money in just pumping these stocks,
Yeah,
So
I feel like I learned that the hard way. And I wish I wish I clued into it earlier, but I know now.
it's really convincing though. They got some they actually get really credible like analysts and people to actually make real posts. And it's just like, and those people who are pumping it are trained up on how to speak and how to comment and all that kind of stuff. So it's really, really good that way. But that's why, when picking stocks, just do your due diligence. Look at, are they profitable? What's the management? Cut out all the noise, put on the blinders on, and then just try to stick to the facts. All right.
Yeah.
So that's your TFSA, which is going really great. Let's go look at your RRSP. I'm going to recap this really quickly, guys. Margin account over 1 million. TFSA, as of the video I watched from a few months ago, was around 328,000. It was up at over 500,000 before, but you sold off a bunch of it, right? You mentioned in your video. And now your RRSP is at around $600,000 as of a few months ago. And once again, you're leveraging covered calls. I'm going to list off all of them really quickly because you have a bunch here and then we'll just go through them. You have Air Canada, CeeLo Waste Solutions, VFV, Amazon, Alphabet, Meta, QuantumScape, Open Door Technologies, SoFi, and Tesla. Okay, so Air Canada, let's go to that one first. Do you just own it because you're Canadian? Because I feel like my mom owns Air Canada. I feel like every Canadian buys Air Canada, right? And you got it at 26.20 per share. It's at 20. It was, yeah. So now it's 20. Yeah, you're like negative $2,000 on it. Air Canada goes up and down all the time. I think it weaves between $14 and like $25 depending on where the market's at. So why do you have
Yeah.
that? Just because you're Canadian, or what was the reasoning?
So I sell covered calls on it as well,
Oh,
but
okay.
I'm trying to do like if you look at what happened during the financial crisis, Air Canada, I think it went from $50 to $10 back to
Yep.
50 before it tanked again. So when I
Yeah.
saw it at like 30, 25, 20, I was like, oh, it's gonna come back. Let me buy in. It's Air Canada. What else are they gonna do? It'll go back up to 50. I didn't have any logic or DD on this. This was more emotional. And I was like, hey, I don't want to miss the boat if it goes up 100%. Let me buy in. So, not the best decision, but again, my stubbornness and the covered calls kind of helped me hold on. And I'm slowly clawing back at that loss that I have right now.
How much does FOMO equate into your decision making? Because it seems to work out for you well. Apple worked out well.
Oh, wait, like you if I show you my crypto portfolio, you'll be like, okay, FOMO really jumped in. I because I'm in finance, I'm talking to people about this stuff all the time. My friend started mining cryptocurrency in 2013 or 2014. I didn't buy until 2015. So my friend retired now because he got in early. He
Yeah.
made like 500, I think he made like 500,000% on his
Yeah.
investment. So I don't mind putting in a few thousand and letting it ride and seeing it happen. Like if you look at my big positions, it'll be like the S&P 500, which I think I have like 900,000 just in that. But I don't mind taking a little bit of risk. It's fun. It works out sometimes. If it doesn't, maybe I can do a tax loss or tax loss harvesting. I don't know. I like risk.
Do you think your risk tolerance went up after you secured the S&P 500 ETFs? Like, I'll for myself, once I had a few $100,000 in, VFV, VOO, I was kind of like, oh, like I could just like let that ride out. I can retire safely. And then I just started getting really risky with everything I was doing. And I never touched that. I kept contributing to all that every year, and I just started doing bigger moves. Do you think that has something to do with it? If you didn't have that sitting in your back pocket, you wouldn't be as,
There's that, but I'm also comfortable on my real estate side as well. So I started buying real estate as soon as I graduated university. In Toronto, it was a little cheaper in 2011. So I kind of got lucky there. So not only is my retirement side based on the income, I think my housing is safe as well, unless, something bad happens, you never know. But I felt comfortable on both fronts. Career was going well, I could take some risk. Portfolio was doing well, and then real estate was going up for me on the side. It was all kind of working out, and I don't know. I don't
let's
know.
talk
I
about real
think
estate
that's my
after
answer.
this, actually. Let's talk about real estate after this. I want to get into that. I'm not an expert on real estate, but I am expanding that part of my portfolio. So I want to pick your brain after this about that. So let's work through this list. CeeLo Waste Solutions. I was telling you before, I did some marketing for them. It must have been a few years ago. When did you buy this? I want to know if I had something to do with this decision. When did you buy their
I
stock?
want to say,
Yep, around
yeah,
there. Yeah. Did
I'm
you see an
sure I
ad
saw
for it?
some ads. Yeah, so there's gonna be a
Yeah.
merger. They're gonna
Gotcha.
get bought out. They're just, yeah, you got me. You got me. But my stubbornness, hey, I will never sell it. So they'll have to pry it away from me at zero
Yeah.
dollars.
Hey, I don't remember too much about it, but I remember it didn't look too bad. So you bought, so it's CMC, CeeLo Waste Solutions. You bought 4,300 shares at 35 cents per share. You're not even that bad for this one. So you put in 1487. You're at 1,300. You're down 154. I would not even. I would hold this too. To be honest, I'd be like, let's see where this goes. Do you know much about what they're up to nowadays? Have you looked into it, like how
No, because
management and
I'm
everyone?
so upset. Like I take every loss personally. I'm so upset I haven't looked at it in a few years. Here's the thing. I think I was up double at one point, and I was like, oh, it's going as exactly as I thought it would. But
Realistically, it's just opportunity lost for the $1,500. You're not even dealing with loss, and it's $1,500 of opportunity, which is okay. I think if you didn't even own it, you wouldn't even know that $1,500 was missing. So I think that's an okay one. I wouldn't be too upset about that. Maybe I'm defending a former client as well at the same time. So VFV, Vanguard again, S&P 500. This is the one I always preach to people. I go, if you're a new investor, just buy, and this is in your RRSP. I guess you can say that I'll say it, but VOO, if you guys own it there, if you have some US capital, you don't have to pay the 15% withholding tax. So buy VOO if you want. If you don't want to deal with that conversion fee, get VFV, either or. You have 1,000 shares, $77.91 per share. So $78,000 you put in, You're at 150,000. So you're at $72,000 profit right now. That's a good one. Are you selling that or anything? You're just holding that same as TFSA
I'm
is?
just holding it. Yeah, I'm not selling any. I don't think I'm selling any covered calls on it, but I'm just holding it for the long term, and we'll see what happens.
When we're going through this, are the only ones you're not selling covered calls on is VFV? Is that the only
I
one
think
that
so.
you're
So the
not doing?
ones that aren't in denominations of exactly 100.
I was going to ask you, I just thought you had possibly some OCD thing where you would only do things. So I was actually one of my questions. Thank you for reminding me. I was like, because I've done that. I've bought stocks in specific numbers because I was like, I don't want to look at it. Like I have to stare at this thing. So I'm like, I'll get those even numbers so it just looks nice. I was like, I wonder if he has that same mental disability
That's
I
so
have.
funny. No, because like, oh, here, that would bother you whenever a stock splits. It could split a weird number, and then you have to deal with it after. But
Yeah.
usually I'll sell like a cash secured put, and that is someone can force me to buy 100 shares at a specific price at a specific date. So if I got 900 shares of the S&P 500, it's because I sold 9 cash secured puts, and that's why it's the even number. So I like
Yeah.
to keep it. Yeah, I just everything's in denominations of 100.
Oh, I was hoping you also had a mental illness. Well,
A little bit.
yours actually makes
I have mental illness and other things. We could once we
okay.
keep talking.
Good to know. All right, Amazon. I just got into Amazon during the April crash. That's when I started buying into it. So you got Amazon Inc. 100 shares, $100. Yeah, roughly $100 per share. So you're putting 10,000. You're at 21,000. You're up 11,000. That's a good one, right?
Yeah,
Um,
yeah. I think I
what
bought it
same
right
thing?
before they
Covered calls on that as
split.
well.
Yeah, so they did a 20 to 1 split. I think Amazon used to be $3,000, and then they did a 20 or 30 to 1 split. Same thing with Google. And what I like to do is I film myself buying it. People think that it's because it's cheaper in price that it's going to go up, that it's a better buy. So stocks go up when a split is
Yeah.
announced, even though in theory nothing changes.
Yeah, nothing changed. They always bump up by like 5, 10% sometimes, right? Like at least
Yeah,
5% you'll see. Yeah.
it's huge.
Uh,
That's why I jump into that.
who did that recently? Was it SCHD or JEPQ or somebody split? I feel like maybe SCHD a few months back.
Maybe.
Okay, so you also have Google. That's one of my favorite stocks. Okay, so for Google, I like it because I invest in things I actually use and things I'm an expert in. So Google, I'm a huge meta investor in Google, like Google, Android. I'm in advertising. So uh,
iPhone.
there you, hey, there you go. So we're both in the same thing. But like that ecosystem, I feel like Google is one of, I think Amazon falls into it. Is like, I don't want to say there's a sure thing, but I feel like it's a sure thing. It's too big to fail. It's such a large ecosystem. And because of, I come from advertising, just you need Google, like they're not going to, AI is not going to crush them. They're going AI heavy as well. They're going to be around for the next 10 years. So I feel like that's a good recommendation to new investors as well. And you have 200 shares, $95 per share. Did you buy it 3 years ago, 3 years ago when it dipped to under $100? It did like,
That's
and
when
that's when I,
so I sold it must have been 110, 115, and I sold cash secured puts like 10 or 20% below the price. And I was like, hey, if it hits this price, I could just take it back and then sell covered calls on it. So I think I got lucky with the timing. I never understood why it dipped that low. It went down over 50%. And I don't know why.
okay, so Google, I'll give a little history lesson. So around this time, Google and Meta were getting hammered by Apple's privacy issues, where this especially Meta. Um, Meta made it impossible to track users. I mean, Apple made it impossible to track users on their phones and stuff. So like if you had like a Meta tracking pixel, I couldn't just target you. I used to be able to target you exactly and get you to like buy my thing. Apple made it very, very hard. So in and around that time, companies like Google and especially Meta, their stocks started tanking a bit because everyone thinking, oh, advertising's dead, it's all messed up. So there was like a panic, but nothing changed on their books. They're still hyper profitable. It was a weird scenario where they're more profitable than ever, but everybody was panicking. So the stock started going like this. And it's like, when do you buy? That's exactly when you buy. So within a few years, I actually bought majority of my shares in both Google and Meta while that weird panic window was happening. That's all it was. It was just an
That's
advertising
awesome.
thing because they make all their revenue through advertising. So you put in 19,000, it's at valued at 34,000, so you're up about $15,000 on that. So that was a really good buy for Google. Meta is next. You have 300 shares, 262.81 per share. 78,000 you put 79,000 you put in, you're at 172,000, up 94,000. That's a good one.
Yeah, I think it's up even more right now.
Yeah. I got
Yeah.
I got Meta. I don't know what the crazy price was, but I got them really cheap. After I think they're like $100 or something insane. And I just took everything I had and went, here you go. And I just went like that with it. It was
Wow.
to this, I made a video on it. It's to this date the best investment I ever made. It was like the
Oh, that's
one
awesome.
big, yeah, it was insane. It was the only time I've ever been that sure about an investment too. Where I was like, this is insanity. And it was for the reason why I just explained. All right, now let's get into some weird ones because we've talked about how great successful you are because you've hit it out of the park with Apple. SPY, you ain't gonna go wrong with that. VFE, not gonna go wrong with that. Palantir, you got in on that. Air Canada, because you're Canadian. One minor hiccup was CeeLo Waste Solutions, but then Amazon, Google, Meta, all good stuff. Actually, looking at this, if you're a new investor, buy either VFV or SPY, either or. VFV probably if you're Canadian. Amazon, Google, Meta. I feel like they're kind of overpriced, getting back to overpriced, but if they ever crash again, buy into them. And then now here's where QuantumScape Corp comes into play. QS, 400 shares, $27.51. Is this what am I right? So you put in, what is that, like $2,000?
I think so.
What? Yeah. So
And
what
now it's
happened
worth like a
there?
dollar. Who
Something, yeah.
knows what happened? I feel like one of the Reddit guys got me. People have been. I just started reading like due diligence on both Open Door and QuantumScape at the same time. So I thought it looked good. I was like, hey, I like the technology. It won't be profitable now, but maybe in 5 years it could get somewhere. I feel like this is one of those recent SPACs that kind of went up. Like in 2020 or 2021, those like companies that start at $10, like merge with someone else. They have an idea, it goes up. I got caught in that, and here I am. I was actually up for a little bit, like it was going well. So, if I bought at 15, I think Open Door was 17 or something. It went up to
Yeah.
30, and I was like, oh, I was correct. Look at me, Warren Buffett. Um, and then it just started going down. And then I think eventually, I hope this doesn't bite me in the butt in the future, but I strong in my convictions, even to a fault. And you could tell here where I just kind of held on. It's not going anywhere. I don't need, if I sell, what would I get out of it? Like $1,000? I don't
Yeah.
need the $1,000. Let me just hold on and see what happens. If it gets delisted, fine. What can I do? It's a learning lesson.
That's about it, right? If it gets delisted, but if it's not delisted, you just kind of watch what happens. What year did you buy? Did you buy them both the same year?
Yeah, around at the same time. It must have been 2021. They were
Were
new
you
companies.
were you doing, like, you're doing well now, but were you doing? I'm trying to break down the mental break because I know why because I know why I do these decisions sometimes, and maybe I'll talk about that. But when you bought QuantumScape, Open Door, your portfolio is probably looking really, really good. You got like a million something. Real estate's going good. You have excess cash flow. So do you psychologically just don't give a shit? And you're like, yeah, if I lose it, I lose it. Da, 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 da. Like, or were
There,
you like, no, this is gonna work. I'm a genius. I'm onto something, and you were surprised when it didn't work. And did it bother you at all, really, realistically, when it didn't?
oh, still bothers me. So I didn't think for sure it's going to work. Like I tried to get in on these new companies in case it goes up. Chances are I was going to be wrong with these new companies. I was going to try to sell covered calls on it as slowly if it creeps up or if it hovers. If I could sell $500 in covered calls on it a month, then why not? I'll make like 6 grand, give myself a little bit of a dividend, some like lunch money. Um,
Yeah,
I was at a point then, 2020, 2021. I don't say this on my channel too much, but I was retired for a few years. And people hate when I say this, but I got bored and then I
yeah,
went
yeah,
back to work. I think
yeah,
being retired at 30 and then having like nothing to do until you're 80 is a little too much. Sorry, this
yeah,
is a tangent. I understand people have hobbies. I like my hobbies, but not 24/7. I like my hobbies
yeah.
on the weekends. I like my hobbies after work. I think I'm just the type of guy that likes to be busy. That's why I do all these business ventures. That's why I went back to work. Um, so when I was trading, I was an options trader, I guess, full time. When the pandemic happened and we weren't allowed to go anywhere, I think I needed something to buy because my fingers were getting itchy. I didn't want to sit too long. So
Hmm.
there's that. Another
That
lesson.
I know that feeling. So even now, when you think about it, do you get annoyed by it because the money, or do you get annoyed by it because it was just a bad investment? Like, do you know what I mean? Like, it's like, oh, I wish I had that money, or it's more just like, God, I got that wrong, or that just didn't work out. Did that agitate you, or what did I miss, or like, is it
There's
more
so
like
many
what?
things. I hate that I was duped. Like the guy, even my friend was talking about it, and he kind of convinced me because he was in a hedge fund. He's kind of works for a hedge fund. He's an analyst, and he kind of brought it up as well. And I saw it on Reddit. I'm like, oh, I heard of this company. I was like, oh, I must be onto something. Um, it just kind of annoyed. I think one thing I hate losing. The one thing I like about options trading is like I think I'm 97, 96% successful on all my trades. And that's how
Yeah,
selling options work. You're majority successful. The 1 or 2% where you're not are usually pretty big. That's
yeah.
where that's the rub. But I think it's being wrong. Being wrong hurts.
Okay, I want to talk a little bit. I want to sit on that because I like the psychology behind it a little bit more. I noticed when, because you said you hate being duped and you lost. Like, it was not about the income anymore. I noticed when my portfolio got to like over a million. When I first started investing, I think I started with like 500 bucks. I was like, oh my God, I want to lose 500 bucks. And now this is crazy. And like I doubled it. It was insane. Like the dollar value meant something to me. As it got larger, as I felt secure, I've been duped once. There's a company called Data Matrix or something like a DM dot whatever. And I remember I ended up selling it, but I remember feeling like, God damn it, why did I buy that? It wasn't that I lost 5 grand. I put 5 grand. It was like the feeling of like the management. How did I believe them? Why was I so sure of it? And I just broke down every thought process that made me go through them. Like, I'm never doing that again. Like that frustration of like, how did they get me? They got me. That's what really got me. And then now it's all performance driven. It's just like I'm trying to beat percentages and stuff. I'm not even thinking about dollars anymore. I'm just like, oh, I want to beat the market and stuff like that. Do you feel like you're in that stage now? You're like, okay, first off, I don't want to get duped ever again because that's a shitty feeling in without any field. And now it's like a competitive performance thing. Can I beat last year's performance? Can I beat the market's performance? Rather than I want to make X more dollars, it's more of a, I don't know. If you know what I'm kind of saying, like it's more
So
performance driven
it's
rather
it's
than,
a it's a mix of all of those. Like I was pretty frustrated where in 2023 where I couldn't beat the market. Like the market went up 24% and I was doing 20. I was like, wait, I did 800 trades to do worse than like
yeah,
the person sitting next to me. So
yeah,
that was kind of frustrated. That's why I stopped doing the advanced stuff and pretty much like the day trading or swing trading. Um, it's all those things. Like I look at the performance. Here's the thing. I don't think I'll ever stop options trading, even if I can't beat the market. My one thing, the reason why I don't think I'll ever be in that position, I own the market. So I own the S&P 500, which to me is the market, fine. And I'm just
yeah,
selling covered calls on it. So like
yeah,
if I sell 5 or 10% above what it's currently at, if it goes up, I'm making that as well. If it goes down, I'm
yeah.
still selling that same covered call. Hopefully nothing happens where it shoots up so much that I can never manage it, but I don't see a position where that happens.
Let's move on to Sophie, which however it's pronounced, technologies. 400 shares. Hopefully I wrote this right. You got it at $7.70 per share.
Something like that, yeah. And now it's probably 16 or 17 or
Yeah, that was a really good one. When did you buy that?
right after they went public.
Went public?
Yeah, like they convinced me, I don't know, the fintech, I was kind of all in. I thought, see, to be honest, I'm disappointed with that one. If you look at the performance, again, the convenient timing of that video, it must
Yeah.
have been at $4 or $5. I was sitting at a loss for years, and then it's just conveniently everything kind of went up when I released that video. Um,
They
yeah,
always say have a
I'm
stomach
actually
for the market.
disappointed. Hmm?
Uh, well, I want to talk to you a little bit about that because they say have a stomach for the market. I made a little short saying, Apple dropped by 50% 3 times, a stock, basically saying, if you invested in Apple 10 years ago, you'd be a millionaire now, but look how many times it went up and down. You have to have a stomach for average for investing. 2 times you've had a stomach for it. You had it with, was it Palantir? And then you had it with SoFi. Palantir, we talked about why you held on to it. It was sort of in that sweet spot. Same thing for SoFi. Like, why did you hold on to that? Yeah, how did you sit through that? A lot of people would have sold. A lot of people did sell. That's why it was in that position. So,
Yeah, again,
what
because
was
it was
that?
such a small dollar amount where if I missed out on the gain just to make back my $2,000, I think I'd be more upset. So there's it's part of that. And I think just like the fintech field, I had a feeling, not even though they were running losses for a while, I just had an innate feeling that would come back. And here's the thing: I still haven't sold it, so it still might go down, and I might not make anything. They might get bought out, but I'm kind of holding this for the long term. I kind of want to be one of those guys in 20 years when it's $1,000, be like, look, I bought it at 7. Look at me. But we'll
Yeah, yeah.
see. We'll see what happens.
Do, do you ever do, like, maybe it's not on, have you ever done a hyper large investment on one of these kind of early bird companies where, you're doing in like $10,000 denominations, but have you ever put 50, $100,000 on one of these?
Yes, so I'm doing it now on AI companies, but they're off market. So like if you're an accredited investor or whatever it's called, they do a couple private placements. So I'm in order to reduce the pain of all these losses. So I have like a limited partnership with other accountants. There's 7 of us. We invest in these startups. We're kind of angel investing, but
Yeah.
we don't have we're investing, but we don't have like the amount, like the billions that these other angel investors have. So trying to get in on something at the beginning. So I have put in uh like around 250,000 into a company, hoping it'll go somewhere.
What's the level of due diligence you do on that before you give them over your money? Like, how long are you just like, you do a little bit, you meet with the owner, like, this is the guy, and you're, a 1 week turnaround, or are you like, give me a few months, let me really break it, like, look
So
into this?
it's like I think it was they're courting us over like 90 days. And
Yeah.
what won me over is they had a part-time CFO. They didn't have enough money for a full-time. So I was just they kind of gave me read-only access to the books and to the bank. And to see them go from negative for 9 months to breaking even to 10,000 positive to 50,000. Um, I know like the developers and the programmers are very expensive, so I know why they're running negative, why they had that those money issues. But they did end up winning me over. It's going well now. I'm trying to. The reason why I bought in is like to be part of the sell. So we're trying to get bought out by someone else. Um,
Yeah.
yeah, I'm just interested to see what happens. I want to be in on something from the beginning. I like seeing something grow from the start because I was there from almost the start when they reached out. It's cool to see.
So that's like, yeah, that's angel investing. Would you ever do that with a publicly traded company though? One that, like, I kind of alluded to this before. I said my strategy is find hyper undervalued companies that are already profitable and getting them, and then trying to like 4x to 10x my returns. And I dump like 100 grand on these. Like, I go mental with it,
Oh wow.
right? So that's why I'm asking you. Like, that's where my risk tolerance is at right now in my life. So like, would you ever consider that kind of strategy, or is that just too crazy?
I think that's a little too crazy for me. I can't believe
Yeah.
I think it's too risky for me.
Yeah, yeah, that's what I was saying. If, I guess that's just how I do it though. Like, it's ETFs, right? I have that, and then it's essentially just huge bets of minimum $50,000 on a company. I'm going like, oh yeah, great, this will double, this will triple, quadruple, whatever,
Wow.
and then I just do that, and that's like the process. But it's only like 2, 3 companies at a time I look at, so I'm not like spread across. Like, your portfolio is not too unmanageable. What do you have here? Like 10 companies at most. Is that something you sort of prescribe to, where, what's that Warren Buffett thing where he's like, diversification is like something for the ignorant, where he just believes in this, like, staying within your circle of competence, having a handful of stocks that are good and profitable, and sort of sticking to those? Is that sort of how you operate when it comes to publicly traded companies, where you sort of know what you're good at? Here are the companies that work for you. You don't really go outside your wheelhouse. Seems like every once in a while you'll go into a, like a SoFi or a Palantir, but really you kind of stay in that lane that is profitable.
Yeah, so when I do go outside my wheelhouse, I usually end up losing money, so that's kind of frustrating. And also because I'm in finance, like I'm deep in the market. So I work for REITs. I've done consulting for a lot of REITs in Canada. And I've
Yeah.
done a video on why REITs are failing. I have more opinions on REITs as well, because like all my other friends are in the financial reporting department, people I went to university with. So they're all VPs of finance at other public companies in Canada. So I'm hearing what they're doing as well and what's happening. So I'm getting a lot of insight. It's not necessarily insider information, but if someone's a VP at a company and I'm like, hey, do you invest in it? And they say no. And I was like, all right, I won't either. It's very telling.
So you don't like REITs at all?
No, not anymore. REITs to me, so I've worked at a lot of REITs, a lot of REITs. There's one right outside, First Capital. I
Yeah, I've worked
think,
with. So I did their digital marketing campaigns and a couple other ones. So like I know I don't own any right now. I just know them from my advertising perspective, right? So like who were their target demo stuff? Like what was wrong with them really?
I have such a weird feeling. So REITs do well when interest rates are low, when it was like 0 or 1%. Every REIT was doing well. Distributions were going up. The stock price was skyrocketing. And like, hey, look, you can own real estate and you get a dividend. It looked great.
Yeah.
Now that rates went up, you can see people don't really know how to manage and people aren't really doing a good job of managing. Look at Northwest Healthcare. They dropped their distribution by 60%. 60%. That means it was pretty much a Ponzi scheme. They were drawing on debt to pay their distributions.
Oh damn.
That's a red flag.
Yeah.
RealCan, they promised they wouldn't cut dividends, and then 3 months later, they cut dividends by 30% for 2 years. First Capital cut dividends by 50% for 2 years. Artis cut dividends by 50% and never recovered. Slate cut dividends completely and then went under. Slate Office. I'm the more I know all the people, I don't want to say too much. I feel like I'll get in trouble. I feel like I
Mm.
know everyone that works there. The REITs right now are just for the C-suite to get rich. It's not for you. It's not for the investor. They're not doing a good job. There's a development in Liberty Village in Toronto. It was 6 years late. This company, this REIT, was 6 years late on something.
Yeah.
Um, I don't think they do a good job at all. It's all like nepotism. It's all the good old boys club. It's the C-suite getting rich, and yeah, I feel like
Do
that's
you know
all I
how
need
it's
to say.
positioned here? When it's positioned through advertising, like I'll keep, and I guess my lens will be like telling investors what to watch out for. I'm the guy who'd basically get you to buy stuff. So here's what to watch out for. It's positioned, and I don't really care. I don't have clients who are REITs, so anymore. So the REITs were positioned as a great alternative for people who can't buy into real estate. It's you buy a REIT, and this is your way to own an apartment complex, to own a ton of real estate. You're in on it, and then you get paid off of the rental income that they get. That's like the simple messaging that we would pump out everywhere. We're like, hey, that's how you buy in. How accurate is that? Was that messaging wrong? What was wrong with it? Because that was the messaging, like a really simplified your opportunity to get into real estate without having to buy a property. You get all the benefits of the rental income, but without all the problems of having to manage a rental property. That's why you buy a REIT. Is that accurate at all?
So it's true. It's true. That's like your best way to get in if you can't afford it. You can just put in $1,000 and you can own a piece of Canada. Where it's deceiving is you're paying a huge management fee when you see how much these people get paid and you see what the CEO is pulling out, and the CEO has like side agreements with all the leases and all the rent, so he's getting a cut. So wait, that doesn't make sense. And then you'll see
Oh,
a certain scandal with CEO getting kicked out, the board trying to take the company back. If you look at Northwest REIT, they changed CEOs twice. So the founder of the company ended up getting booted by the board, and they never really said why. Um, and then a few days later, they cut the dividend by 50%. So I think in order to avoid lawsuits, they don't tell you everything. But it's also there's certain tactics they do. If you look at um, certain REITs where they have high occupancy, like, oh look, 98% occupied. Hey, that's amazing. If you look at the last 20 years, it's always been 98%. Like that's kind of weird. You guys have
oh
never had
yeah.
a bad quarter. So what they do is occupancy percentage is only on units that are online. So if let's say Target leaves, Target has 100,000 square feet, they all leave, they went under in Canada, but the REIT still had the same occupancy percentage. It's like, oh, it's offline, so it doesn't count
Yeah.
towards the occupancy percentage. Sorry. It's just very deceiving, and I just think when rates are low, REITs can do fine. Now that rates went up, all the REITs are tanking, they're cutting their dividends, they're not increasing, everyone's getting shown as a bad real estate developer. I think the C-suite get paid too much. I think REITs right now are just for the C-suite to get rich, not you.
Yeah, thanks for explaining that. You basically told us how the C-suite gets rich. They're doing all this shady stuff, and they're basically siphoning it for cash. Um, so I guess so. Let's simplify all this. So REITs make sense when interest rates are low because margins are better, and hopefully the C-suite doesn't take too much off the top.
And their mistakes aren't shown. Their mistakes are hidden. So when no one looks into your books too much when you're doing well, it's like every year, every quarter is a record quarter. No one looks
Yeah,
into your books and nothing's an issue. All of a sudden,
yeah,
rates went up. You didn't have your best quarter. It's like, hey, this number's kind of weird. It's like, hey, this number's
yeah.
weird again. And then like First Capital, I think they were selling properties to pay the distribution. They won't
Oh,
admit it. How does it make sense when you earn rents, but they're saying how they word it? I hope I don't get sued. How they're wording it is we're selling non-core. Like, hey, this wasn't part of our core, but yeah, but you bought it 3 years ago because it was part of your core properties, and now you're selling it at a loss. I could go on for hours. Yeah,
this is not financial advice for anyone watching. It's me, a guy from advertising with a YouTube channel, talking to a buddy, and we're just talking about REITs and our experiences with REITs.
yeah.
So that's it. So nobody get mad. It's just two people who spend a lot of time investing, talking about investing. Okay, that's man. Thank you. I learned a lot there. I appreciate that because
I could
I
talk to
honestly,
you for hours about this kind of stuff, but stuff
you,
offline that I can't say.
yeah, I'll talk to you more offline too as well. Like I can only divulge so much about advertising. And I think, to be honest, me talking, I'm like maybe I need to open up a bit more about tactics companies are using to scheme investors into buying their stock. Go to the next one. It's Tesla, and I'll talk a little bit about what I did with Tesla, and you just tell me your thoughts on it. So Tesla, 200 shares, $36.61 per share. Uh, yeah, I got these numbers wrong, but you spent $7,322 and you're up a bunch. I don't know if this is accurate. Are you at 69,000 on that?
Yeah, yeah. So I know I spent more
Wow.
than that on it. Yeah, so I think
Yeah.
I spent a lot on it, I remember. So Tesla, I've had Tesla the most. I've made I've made over $800,000 on Tesla itself
Damn.
throughout. And I on my channel I have 106 trading videos, and you can see in those 106 all my trades. I could make a trade, and so I used to film 3 times a week. So on Monday you'll see my trade, on Wednesday you'll see me make money off of it. I've made so many trades on Tesla. I've made around $800,000 on it. Obviously, this only happened. This is a rare scenario because Tesla was skyrocketing. Tesla went up 27,000% in 15 years. So a
Yeah.
lot of that time is me getting lucky and riding it. I can't recreate this. I don't think I'll ever be able to recreate my success with Tesla ever again. It was just a weird scenario. CEO is kind of crazy. When do you have a company in 15 years go up 27,000%? Um,
Yeah.
I like I'll never own a Tesla. I like gas cars. I like the stock. I I don't even like the CEO anymore. I don't want to say his name so you don't get flagged or something, but
Oh yeah. Thank
every
you.
time
Yeah.
he tweets, like something happens. I liked him initially because he was such a troll. Um, when people wanted to short his stock and the stock would go up and people would lose billions, I thought it was funny. I own
Yeah.
the stock, and I would
Yeah.
make money every time he would say something crazy. I'm not enjoying that ride, that roller coaster anymore.
Yeah. Yes.
Yeah.
So that is a little bit why I sold. Okay. So I want to hear your thoughts on what I did because I'm not an expert on Tesla. And the main reason, number one reason why I sold is because it actually, remember, circle of competence, it's outside of my wheelhouse. I just don't know about it. I just know the guy on TV who says crazy stuff. They got a good, profitable company, but I just don't know enough. Like, I just know what most people who are kind of involved in the industry know, but no, I'm not an expert. Like, you probably know everything about Tesla at this point. I would need to know at least 80% of what you know for it to feel confident to hold the stock. And that would take me a while. So I sold it for that main reason. And I bought it during the April crash, right? And I went, this is easy money. That's all I saw. I went, hey, I have X amount of dollars. I'm just going to buy it and then hold it for a year and then flip it because it'll probably get back to an all-time high or something. It'll get back to an all-time high no matter what within like a year or two. There's no way it won't unless he dies or something crazy happens. And then I just realized after a month of holding it, it's up 50 something percent. I went, I can't do that. I'm like I can't
In a
do it with this guy
month?
anymore. But yeah, it went crazy because I bought it at its all time low when it crashed in
Well
April.
done.
So when I sold it like a week or two ago, right before he had a falling out, it was up at like 54% or something. So I was like, great, I'll take that because I don't even want to own this in the first place, and I can allocate that. And I'm pooling together cash right now to buy. Remember, I said I do these huge investments. I'm like, let's just get that fund together. So I'm like, sold it off and I took it. But the main reason was normally I would hold a stock if I was more comfortable. I'm like, I'm just gonna hold this for the next 5 years because it hit a low, it'll probably hit a bunch of all-time highs. It was just too volatile. I didn't know what was gonna happen with him and his best friend, the president. And I was like, if they have a falling out, it'll drop and drop 14%. Right after the falling out, I was like, I don't like owning stuff like this. No matter how good it is, I don't like that level of unpredictability with this amount of cash.
Yeah, sorry,
involved.
could
Like
I
I
cut
had
you
so
off
much.
for 1 second? My laptop
Yeah,
is dying. Could I plug it in?
yeah. Go
All
no.
right, so we're just gonna cut it.
We'll come back.
A few moments later.
So what I was saying was I sold it because I didn't like owning something that volatile with that amount of money. If I had less money on it, maybe I'll hold on to it. But I was just like, I need to take these profits was at a, that's crazy profits for the amount of cash. I put quite a bit in. Like I put way more than I initially was going to put in. I was just like, because it just felt like such a sure thing. And I was expecting a 30% return within a year and I got way more than that. So I'm like, let's get out. And then I just figured I'm going to allocate that now to one or two big stocks that I have that I'm like an expert on that I know I'll probably get the similar return on. It's just I won't have to deal with opening up my laptop every morning and being like, what just happened? What just happened? And that's what it was. Someone in my comments when I made a video yesterday being like, I sold all my Tesla stock, said, well, you just missed out on huge returns in the future. My response was, yeah, but I'm not an expert on Tesla. I don't like the volatility of the owner, and I can use that money for an area that I'm more of an expert in and probably get similar returns. Like I'll find another company that'll have the similar returns. I know I will. What do you think about that? Should I have held it? Or do you think I made the right decision on that?
No, at this point, I don't know how much higher it'll go. For options traders, for traders, the volatility is actually good because I
Yeah.
need the up and down so I can ride it. So every 30 days, I can make a decision on where I want it to go, where I think it'll go. Also, the volatility means you make more on every options trade. So if I do the same trade on Tesla versus SPY, I make 2 to 3 times as much on Tesla. Like if I sell a covered call 10% above the current price, I'll make 1,000 versus 300. So the volatility means you make more money.
Explain that a little bit more. Cause now it's starting to sink in a bit. So the more volatile a stock is, the more you get paid out on that premium on it.
Because the more risk you're taking.
How do they assess what to
So
pay you?
it's the market first of all, but also it's based on like the Black-Scholes model. It's a lot of like math. So you have like your beta, your gamma, your theta, and then VIX. Vega is the volatility. So it's a number of things. The biggest thing with an option for me is theta, which is the time value. So if I buy a 2-year option, that means someone has to have 100 shares for 2 years. So they're going to charge me a lot because I'm holding them. I have a contract that can force them to sell me shares in 2 years. If I have a contract for next Friday, that's only like 2 weeks.
Yeah.
I'm going to pay a lot less because that's only 14 days of risk versus 2 years of risk.
Yeah.
So there's a lot to go into it.
Right. That's interesting. I want to, let me think here. I lost my train of thought here. I want to talk a little bit about real estate with you. I know that was one thing I want to jump into, but let's summarize the sort of what we broke down here today. So we went over your margin account. You've Apple and SPY in that. Apple, you're selling covered calls on. SPY, you're selling puts. Then we went into your TFSA, VFV. You're just holding on to that. You're doing what I think all beginner investors should do. Just buy VFV in your TFSA. If you don't want to do if you don't want to do the crazy stuff I do, don't want to do covered calls like Bassim here, just do that. Then you got Apple, Palantir. Were you selling covered calls on Palantir in your TFSA or no?
I was, but then it was going up so much that I stopped because I kept losing on it.
Yeah. Okay. Yeah. And that's something to consider, right? When it starts going up too fast on the covered calls, you have to be cognizant of that. And that's when you just stop basically doing it, right? You did.
Yeah, because then I was just going to lose the shares. And if it was going up that much, something was happening. You make more money from owning the stock than by selling the covered calls. So it didn't make any sense. And I just wanted to see where it would go.
Yeah. When you do the covered call, you're hoping that they don't call you on it, right? You just want to collect the premium.
Exactly.
Yeah.
Like my goal, so I'll sell a call 10% above the current price. I want the price to go up 9.9%. So right below where I sold. And then the next month I'll do another 10% and another 10%. Yeah.
Does your premium change
upwards.
the closer it gets to that strike price? Like if it gets to 9% or 9.9%, do you get paid differently?
So you sell it in advance. So
Uh,
if I buy a 2-year option, I'm paying you now for what I think it would be in 2 years, kind of thing. So
yeah.
it doesn't matter in 2 years what the price is.
Yeah, okay. That makes sense.
Yeah.
Okay, so RRSP, you had Air Canada, CeeLo, VFV, Amazon, Google, Meta, QuantumScape, Open Door, SoFi, and Tesla. That is your portfolio. That is the $2.2 million. So moving forward, what is your kind of overall strategy? Is it continue to build up VFV in those kind of tax sheltered accounts and then continue to do covered calls on sort of that core group that you have, which is Apple, Meta?
Yes, and see where the market goes, pretty much. My margin account, I've moved it over to a Cayman Islands account. There are certain tax havens, legal tax havens that you can do. So I've moved everything over out of Canada, my taxable side, to avoid the tax. As long as I don't repatriate the cash, so I'm not bringing the money back, I won't get taxed on it. So I want that for my retirement. I want it to grow offshore because I get taxed too much now. If you know, the top tax bracket in Canada is 53%, and I refuse to pay.
Okay, I got some questions about that. And to say however much you can tell me about this. So you ought to keep it in the Cayman Islands. I don't know anything about offshore tax sheltering and stuff like passive income. Last week, he's in Panama to avoid, not avoid, just pay less tax. I don't want to get him in trouble, but just do less taxes. Cayman Islands, similar type of thing, but you don't have to live there. You can just set up an account in the Cayman Islands, but you just have to keep that money in the Cayman Islands. That means you can only spend it in the Cayman Islands, or you can spend it anywhere but Canada.
So
You throw it.
you're not supposed to spend it anywhere, but as long as you don't spend it in Canada, that's
The main
what
thing.
I say. So you can never repatriate it back.
But could you spend it though? If I were like, hey, I want to use this money, I can go to the States and go spend my Cayman Island money.
Yes, yes,
Okay, that's what I'm
yes.
wondering. Okay, is it a complicated process? We have to get into it to take money, take an account, and set one up in the Cayman Islands. Are you dealing with the Cayman Island government to set that all up and going through their process to set up a bank account there? Similar to like I'm Indian, set up an Indian bank account. You have to go through their system. Is there anything you do on the Canadian side to get set up in the Cayman Islands?
No, there's nothing I do on the Canadian side. There are tax treaties that kind of help this. So, in another tangent, the tax system is designed for the rich to get richer, and they set up these tax havens on purpose so the rich people can go put their money offshore, as long as you don't repatriate it. But the rich are greedy and they repatriate and just take the risk anyways. But I flew over there, set up an account, virtual home, virtual office, did my KYC, got all set up, and it's all legal. It's all
I
legal.
I 100% believe you. Uh, we believe you. Uh,
Yeah.
on that account, so you set up in the Cayman Islands. Uh, so you have your margin account there. Could you, and you're buying Apple. So could I just set up a regular non-registered account in the Cayman Islands, buy stock like Apple, like VFV in the Cayman Islands, and what? How much are you saving on taxes actually? Being in the Cayman, if yeah, what percentage?
So I'm probably saving $100,000 a year on tax.
Just on that margin. So what is that? So that like, what, do you have a percentage amount? So someone could, if someone has $1 million, what percentage would they save on that?
So it depends on how much you're making a year. So if you're making, so here's the thing, the tax there is, the tax there is zero. So if you're making $1 million a year there, you're saving 500,000. If you're earning dividends, if you're just going to retire, if that $1 million you put in turns into 10 million, you're saving 4.5 million. So it depends.
What's the Cayman Islands getting out of this? They're hoping that you spend money within their economy because you're holding it there. Is that what they get by
There's
charging?
that. Yeah. Yeah.
So, but it's literally just 0% tax. So whatever you buy there, you pay no tax on. There's no anything associated to it.
I'm sure so I only did this recently. I'm sure as time comes around, there are fees and things I won't know about.
But
I'm
nothing.
with it, as long
Yeah.
as it's not going to be 53%.
53%. That's all you care about. That's really
Yeah.
interesting. I think I need to start thinking about that because that's something I've been thinking about a lot, being like, Jesus Christ, it's getting kind of crazy. And like you said, non-patriotizing it back to Canadian income. So just keep it in the Caymans, spend it somewhere not in Canada. So it just be an amount that I feel comfortable not having to use in Canada ever.
Yeah, there are other things you could do. Like if you want to buy property in the US, you could just like start an S corp, buy a property, and then you can open a virtual office or a virtual company in the Cayman Islands or Bahamas, and you can like charge it a management fee, and it all turns into zero if you're renting it out, or if you can go live there if you want as well. There's a lot of options. So in all my experience in hindsight, I don't think I would have done Cayman again. Just I paid an advisor, probably too much. Um, I think there are easier ways. You could do Dubai, you could do Saudi if you want. Yeah, there are a lot. I think there's easier
Yeah,
options.
Dubai is good, right? There. I think that's where I got it from. It's because Dubai is using it to build up their economy by just bringing in all the billionaires and stuff. And
Everyone's going there. I'm
yeah,
even seeing YouTubers going there.
are they? They're 0% as well.
There's 0%. Yeah.
That's interesting. Dubai would be cool.
I probably should have done Dubai mainly because it could be somewhere I could live in the future. Like I don't think I could ever live there, but I know for sure I want to live in the Cayman Islands. So maybe I should have picked somewhere where maybe I could see a future in, and maybe like, hey, I just won't repatriate. I'll just go spend the money and live there.
Your well,
But you know,
your name is Bassim. Are you Arabic ethnicity of some sort?
yes,
So do you speak Arabic?
I do. Yeah,
Is Dubai? Do they speak Arabic there too?
they're mainly English, but yeah, it's
But they,
Arabic there.
I'm just saying
It's
that'd be pretty
yeah,
good. I'd blend right in. I'm all about it. I just, they wouldn't know until I started talking.
that's true. Yeah,
They'd be
yeah,
like,
yeah, yeah.
okay, that'd be perfect for me. Yeah. Um, okay, that's cool. Yeah, I think Dubai is a good option for anyone who has insanely high net worth. Maybe skip the Caymans, think about Dubai. I made a video on my channel called "Why is Dubai So Rich?" So that's where I did. I learned everything about Dubai. I just did research for that video. I have a lot of random
Oh, nice.
content.
Have you ever been?
No, never. I want to go. My wife really wants to go because it just looks beautiful. They're like they have literally everything in Dubai. They've made it just so it can you can probably go skiing there, and it's in the middle of a desert, right? So
Yeah, so there is a dark side to it. So it's doing so well because it's built on like the slave labor and stuff.
yeah,
And the reason why everything is so cheap is because some people are being taken advantage of. So that's what I didn't enjoy. And I don't like I never went back because I just felt so weird about it.
is it
Um,
obvious? It's like everywhere you just see it, like people working on
it's
stuff.
extremely obvious. Like why, like a massage by by an immigrant would be, I don't know, it would be like $5 or something. And I'm like, hey, this is
Yeah,
not allowed. This is not normal.
yeah, that's kind of great. That's how all the buildings got built too, right? I know they immigrate. My parents are from India and stuff. They immigrate a lot of workers from India. I'm pretty sure, and they have them working
Yeah,
and
and
stuff.
construction there's 24/7. So they do 12-hour shifts in like the 40 or 50-degree heat. Um, I don't think I think people will look back on that city in the future and be like, hey, someone should have stopped this.
It's like how the pyramids get built. It was like that's how you build those mega structures, right? Someone's suffering to build it. It's
Yeah.
interesting because if they're that much money, they can reduce the margins a bit and pay people a little bit better. And it's like,
No.
no,
When you meet these people, it's a different when they're like, you don't deserve to get any more. It's not like, hey, I'm
uh,
rich, but I need to get richer. You don't deserve anything because you're a lower class.
that was a
So
culture
here's the thing,
shock.
even
Eh.
yeah, and it's like, hey, what they do is they pull up the ladders behind them. If someone makes it, they'll pull up the ladders behind them. No one else is allowed to make it.
So
Um,
I went to India, I don't know, like 2019 or something. And it was my first time ever being there, other than when I was like 2 years old. And you're in Canada, I'm in Canada. We're so used to this. And even people in America, we're used to this. Like, so you talk to a CEO, you talk to someone who makes minimum wage, someone who makes $1 million, you're just like, whatever, you're a person. Everyone's the same. Who cares? No one really cares. You're just going about your business. India has that same problem. There is a crazy, not just religious caste systems. I come from like Sikhism and then Hinduism. They have on top of this income, they have these religious caste system, which is get in the way of everything. You have like this income class system where it is hard to wrap around your head, where the value of life is less. It's like if you're not in that, it's like the human being is worth less in general, and they're treated as such. It is crazy. We had a driver in India, and I was being cool with the guy. It's like we drive around, hey, come in, come eat with us, but I had a cousin there who's from India. He's like, stop bringing this guy around, get him away. He yelled at the guy, like, get away from us. And he's like, no, you have to stay in the car and wait in the heat. Well, I was like, this is insanity. Like, there's air conditioning inside. I'm not gonna make this guy wait in a car with the car turned off. Like, no, you gotta turn it off because you're wasting gas. So obviously I went against it because I'm from Canada, but everyone is so desensitized to everything. It's like everyone stay in your lane. If you're poor, you do the work, you suffer more. That's just who you are. And it's the value of life is less. And it's if you're a super smart person and you're born in that atmosphere, you can't work yourself up to the top. Where if I'm poor here, like I came from medium income parents, medium to low income, just by having some decent level of intellect can build yourself up to whatever. There, you're screwed. And the best example of was driving. There was a pile of garbage, like really high, like about 2 stories high, kids playing in it, and then right beside it was a BMW dealership. And I was like, that's essentially the country in a nutshell. And it's like your brain can't comprehend till you see it. And I guess Dubai's a crazier version of that because Dubai's got high end like luxury and that, right? India's still kind of a mishmash of,
Yeah, yeah, and I think so. I guess with Dubai, like I think if you are smart, you can make it up to the top,
yeah.
but that you will then pull the ladder behind you, and no one else is allowed. Like
What is that,
that's the feeling I
self-preservation?
got. No, it's the scarcity mindset where they think if someone else gets rich, they can't be rich, so no one else is allowed. And yeah, I don't know. I just got such a weird feeling, such a bad vibe.
It
I don't know.
rubbed
I
me the
think
wrong
people
way
look back on it.
it rubbed me the wrong way the whole time I was in India. I was like, you can't, it's hard. And then you're born into that. So the people there don't even know that's like, they think I'm the weird one being like, why are you so nice to everybody? Where
That's
anybody,
crazy.
not just me, anybody coming from Canada States would be like, this is craziness. You cannot treat people like this. But it's just how it is. It's just like the crazy thing. Any Indians commenting, tell me, am I just a wussy who's Canadian? But that's how I saw it. Like it was wild to me. Let's pivot a little bit. Hopefully I have you for a little bit. How long do I have you for?
Whatever.
Okay. I want to talk a little bit about real estate. Your background is, you said, was it accounting? Your background?
Yeah, so I'm an accountant, but then I became a realtor as well.
What is that? You just were like, I want to get my real estate license. So you did that. And then,
I got the day I feel like the day I graduated university, I just got my realtor license. So back 2011, properties were a lot cheaper then. So with 5% down, so 15,000, I was looking for a house. So a house is 300K. I was looking for a house. I only needed 15 grand back then. I had a realtor who was trying to tell me about cash flows and taxing. He was giving me the wrong information. And I was like, yo, let me fire this guy. It took me 3 months to get my license. It was basically a high five, a slap on the butt, and then you could get your license.
yeah.
It was ridiculously easy. So I got my license to buy my own property. I didn't I didn't want to do it to start a business, but at work, people saw that I had a cash flow positive rental property and they trusted me. So they started coming to me to help them get a rental property. And I kind of grew it just by accident. It really wasn't my purpose. It was only, I think it was $1,000 to get my license. And then the commission I saved must have been $10,000. So it was a good idea at the time. And it just kept growing and rolled from there. And now I get people from my YouTube channel asking me to help them buy property. So I ended up hiring a few realtors to help me out because I have too much volume.
If you had to assign percentages to your time, how much is going towards YouTube? How much is going towards real estate? How much is going towards accounting?
Accounting is definitely the most.
Yeah.
It's like 8 to 6 every day. That's why it was kind of hard for me to book a time for you for this.
Yeah.
I guess I'm just too busy with accounting.
Mm.
So YouTube, I think I do like 20 hours a week. I film, script, edit, kind of release every week. So I spend that time on the weekends. Here's the thing: money to effort, real estate is insane. real estate is insane. Maybe after this, I could show you some screenshots and maybe just some examples. I just don't want to turn people off. But as my friends become VPs and some of them became doctors now, we're in our mid 30s, they're buying $4 million properties, $5 million properties. So 2.5% of 4 million, you can kind of guess.
Yeah.
So it's pretty good. A few times this year, last year, I did properties over FaceTime. So the people never saw the unit. I just filmed it for them, and they bought it, and it's been working out pretty well. Like they were just in Switzerland, like on a ski trip, and they're like, "Hey, we want a property. Can you just like take a video for us?"
So you're a real estate agent essentially, right? You're just
Yeah. I'm an agent. I buy and I sell houses. I did 14 deals last year.
But you're buying and selling on behalf of other people though, right? You're not buying the properties yourself, or are you doing
Not
that?
for myself. No.
Are you getting so? And you said your YouTube channel is probably providing a steady stream of people being like, "Hey, will this work?" They know you. They know you know what you're talking about because you probably talk about it. You got a nice little system going on there, buddy. That's a nice little.
Yeah, it's working out pretty well. I'll never quit accounting to go real estate full time. I feel like real estate agents won't be around for long. It's ripe for revolution, in my opinion.
Yeah.
You don't need me 100% of the time. I feel like I'm good at sales now because I read a lot of like negotiating books and tactics, and I can bully people. I don't think I should make 2.5% on a property that doubled or tripled.
What about this though? There's that one guy, that guy with the gray hair in New York who just did like $12 billion in sales. He's like guy was probably like 40. I don't know who he is, but he's like slick white, black and white hair. Do you know who I'm talking about? Like a pretty boy.
I don't.
Okay. Well, either way, he has a company, and his thing is he does something X $1 billion a year, and his thing was and he's a YouTube channel and his exposure. He's like, I get eyeballs, and he's saying, and he does large properties like 4.5 million, $20 million properties. It's all New York stuff, and he's like, that's what people are paying for. It's I can get this property as many eyeballs as humanly possible. Can't you essentially do that for your clients if you really want to? But your channel is, you got a lot of investing content, but I guess you could create a real estate only channel and do something like that and get more eyeballs. Would you ever think about that? Because you're saying you're not needed anymore, but that's always going to be needed. You being an authority in that space, getting people eyeballs. No one can do that themselves if you've built something like that.
That's true. I don't believe what that guy's saying because like a $20 million property, is someone going to buy it because they saw it on YouTube? I feel like you're in a special class. So in some of the neighborhoods in Toronto, like a lot of the ones I did last year, it's not officially listed, so it's off market. It's people in the same neighborhood. So there's like a neighborhood that has like $10 million properties, and they don't want to list it publicly. They don't want people coming in to see their house. It's other people in the neighborhood buying it for their children. So they don't want eyeballs, actually.
Yeah.
They don't want to see how they live. They don't want the price listed on House Sigma. You can adjust the price. You can remove the price on House Sigma. So they kind of want it a little secretive. So a lot of my sales, I think 10 of my sales were off market because people didn't want it publicly known, and if they're public figures as well.
So we talked, I mentioned this before, like, do you buy properties yourself though? Because the market's so expensive right now, and rental properties, like that's why I want to talk to you about it. Because I'm looking at, you can be my real estate agent here and help me out for a second. So I'm in a house fully paid off. I bought it years ago, so I bought it for a couple dollars. So it was very, very easy. But this can be, and I don't rent it. My office, my whole basement suite is just my office. I have 2 1-bedrooms that I don't even rent. One's just for guests, one's just an office. I was like, okay, maybe I can flip this into a giant cash positive house and then buy another primary residence. But when I look at stuff, it's like everything feels overpriced. Is it ever going to go back down? Is it ever going to equal? Like, I'm in Vancouver, by the way. So you're talking like 1.5 million for something garbage.
Yours is worse than Toronto.
It just seems insane. And to the point now where, I don't know how to even recommend people buying a home because I've done some research. It's like, if you're renting, you might as well just keep renting. Don't have the headache of a house and then just invest in the S&P 500 and then just retire and be good because you'll get better capital appreciation off of that than a home at this point. Like, I just don't know. Like, and I want to buy a rental property, but I'm just like, when you're covering the mortgage, you're covering everything. Like, it's the unexpected costs. It's still break even for, if anything. Like, I don't get the business model.
The good part about a rental loss is that it's 100% deductible. So if you're in a high tax bracket, you could get 50% back of the loss in your tax. So it kind of it's a smaller tax hit at the end of the year. But what you're saying is correct. I don't see how people can make it work now. It's gone up too much. Like I bought in a suburb in 2011 in it's called Newmarket. It's like not a great place, but the property value has tripled, and I make 2,000 a month on the cash, like cash positive property. I No one can do that anymore. Like I try not to talk about myself on my channel too much anymore. Like I did that portfolio reveal, but again, I said it doesn't help you because you can't recreate that. This is 15 years of work. It's a lot of luck. Tesla went up, Nvidia went up. I try not to talk about my real estate portfolio either because I bought for 300,000. It went up by itself. I didn't do anything to it. I don't renovate my properties because I don't give tenants renovated units because they ruin it. So I can't recreate any of this.
A couple things though. I don't think there is a problem with you talking about it because, like we're talking about property, but everyone, you'll see it online, like this guy has 8 houses and people are thinking, I don't make enough money. This is bullshit. Like, are people just richer than me? It's like, no, man, I only own it because I bought mine, same with you, like 2009. It's like, I don't know what I would do if I tried to get in now. Like it's good timing. And I think people need to know that so they don't feel like something's wrong with them. Like you are not the problem. The market is the problem right now. And that's sort of what I'm hitting now as someone like I'm still in a good situation, fully paid off. I can just make a cash cow to help pay off. This will pay off the mortgage for the other place. But then I'm at break even. It took me 2 houses to get it. That's still insanity, right? When you think about that. But like,
Yeah,
and even
it doesn't make sense anymore.
but even for let's say your stock picks, I think that did help because when I was going through your portfolio, and that's what I was asking about your mind frame, I need to understand why people are buying stuff, why not everything's a winner. When you did make those losses, why they happened? Because you fell into certain traps. I fallen into the QuantumScape open door technology trap. A lot of new investors are going to fall into that. They need to know why that happened. They also need to know that what you're doing with the covered call strategy, if they want to level up to that. Especially if that's a level up game. I'm not even doing that right now just because I don't feel like I can juggle that with everything else I'm doing. I just can't pay attention to that level. Like I can't even do a 30 day because I'm like, I just can't do it. Like you're tuned in, you're an autopilot. It's like breathing for you. So I get why you do that. And I think everyone in their life has things that seem difficult to others, but because you've done it so much, you just put in that mileage. It's so easy for you. We all have stuff like that we're good at. This seems to be your jam where you can do that. But us talking through your portfolio here is, for me, it helped. I understand your decision-making process. I go, okay, that's how you think. And that's why I was talking about how I think to see where are we on the spectrum of investors. And I think people need to see this is just these two guys. We can vary this much in how we approach it, but we're still sort of a commonality. What's our commonality that we have? Because we have 2 different approaches. You do covered calls. I do these psychotic lump sums into stocks, but we did meet on the still buy ETFs, still buy VFV, still have that one thing that, rain or shine that we can check back out in 20 years is still going to be there. And I know on your channel, you still preach that. You still tell people, hey, grab an ETF. I know on mine, that's sort of what I talk about because it's a safe bet. If you had to talk to a new investor, what do you think? And you do this on your channel, but I think to help out for this podcast, what are you telling them? What strategy are you giving them for their first 3 to 5 years of investing?
I have 1,000 questions to ask first. It's like, have you paid off your debt first? Do you have an emergency fund? Focus on those. Focus on credit card first, and then an emergency fund. So not having an emergency fund is an emergency in case something happens. We're entering a recession soon, so you might lose your job. So 3 months is probably too low. Try to have 6 months of emergency. And then I try to tell people, like, don't pick stocks. Like if you're not an expert and if you can't handle the anxiety, just buy an ETF. If you like a dopamine hit, you could do dividends. People like to see dividends come in every month or every quarter. I have another friend here who had like $1 million cash in his bank, and I was flabbergasted because he didn't want to invest. He was too scared. He didn't understand it. He didn't even put it into a GIC. So he started a business. It ended up doing really well. And he's like, I've never had this much money. I don't know what to do with it. So I didn't do anything with it. So
technically better than doing something stupid, though.
You're correct. You're correct. But with inflation being 30%, I feel like he's losing 300,000 a year. But he liked the idea of dividends, even though I told him it would pay less than the S&P 500. He liked to see something come in. So he put like 750,000 of it into dividend stocks. And now he'll send me a screenshot of like the money coming in. He's like, look what I did. I'm like, this is great.
With $1 million, it makes sense. And you can even do something like I have a covered call dividend portfolio now, and the emergency fund. I use my emergency fund. Instead of putting a GIC, I put in a covered call because I was like, really, I wasn't doing anything with it. Like I was actually doing what your friend was doing. I was just staring at $100,000, and I was like, I just keep it there because I was like, just in case something happens, I was like, I'll put in a covered call by Hamilton ETFs, right? Because I'd worked with them. I've done advertising with them. I knew them. I knew they're good, right? I'm LinkedIn friends with the owner, right? It's all like CEOs. I'm like, we're all good. So I knew it was like a good thing. And I know the product so inside out. I was like, whatever, I'm good. It's like liquid enough where I can just sell it. Maybe I take a loss that month if I sell it, but by that point, just those dividend payments and covered calls, I've already paid back that difference on loss if I need that cash quick. But for me, it was, $100,000. I put it on UMAX, HYLD, and HMAX. All right. And I just have it heavier on UMAX, which is Canadian Utilities, which is like as safe as you can get for covered calls. But did your friend with the million, because still I have NAV erosion, and so I got to think about all that stuff. So I'm just kind of reinvesting it, and so I can avoid all that and inflation. Did your friends pick something like XEI, which is like a 4% dividend, which has capital appreciation, actually, like something safe like that, like a simple?
So I think he chose 6 or 7 different. I gave him the option to. He chose one. He did just banks. I think it's like like ZEB. It's like it's a BMO. It's just the
one.
banks. Yeah, so something like that. So he chose a few. Some of them he gets paid monthly, so they're REITs because he kind of liked the monthly hit, and then every quarter he'll get like this fat quarterly dividend.
What do you think of covered call ETFs? Your overall thoughts about them?
I think they're good to live off of. I think if you're retired, they're good, but as long as it probably won't do as well as the S&P 500. So as long as you know what you're getting yourself into. I started with dividend stocks before I went into like overall market investing. I think my first investment was TD Bank. I liked the idea of getting paid because if you think about the S&P 500, I invested in it for 14 years. If I never sold covered calls on it, I didn't actually make anything. I have an unrealized gain, but I've made zero off of it because nothing like hit my account that I could make. So just dividends feels good for people, and I understand.
What do you think of what I'm doing then? I'll tell you what I'm doing. I just want to hear your thoughts. I just bought HHIS, the Harvest High Income Equity. It just has like 7. I talked to Passive Income Investing, Adriano, right? Like a week ago. And I told myself I wasn't going to buy anything after I spoke with him, but he had HHIS in its portfolio and it has like a 25%, something ridiculous. And it's Harvest, and it's like they have like Tesla, stuff like that. It's just basically selling covered calls on the same stuff you own, but just in an ETF. So I added that to the 100,000. I sold some shares of Hamilton, added a little bit more Harvest, modified those percentages. So it's HHIS, UMAX, HYLD, and what your friend has, which is the banks, which is HMAX, which is his banks. And I did that because I didn't want to put in GIC, didn't want to put in like high interest savings. I kind of just
liked. That's so boring with 2%. What am I going to do with that? I'd rather
I
lose
thought,
money.
hey, I'll do that. But then I know NAV erosion, I know inflation, so I'm just reinvesting it all 80%. But it's in non-registered account, which means I pay taxes on all that. So I put in 80%. I hold 20% to pay off the taxes that'll occur from it. Right? I just assume I'll have to pay. That's why I say that's a skew. So 20% I hold, 80% reinvested, and it's really just there for me to then liquidize one day if I ever need that cash for only an emergency. But that's the only reason. I didn't want to put it in a long-term thing like VOO or VFV or anything like that because I never sell those. This is something meant to possibly sell for an emergency in the future. What do you think of that strategy?
So I like it. You know what's interesting? You could benchmark it against your other portfolio now, and then your emergency fund might outperform your other portfolio. That'd be pretty interesting. I like the idea of doing that instead of going all into one. Like you didn't put 2 million just into those covered call ETFs. You have a variety. I like it. You're knowledgeable enough to know the risk, and you're also taking care of the tax on the side. I like what you're doing.
I feel better about that because I couldn't find anyone who was doing that. I just sort of thought it up one day and I was like, I want to try this. And it was a lot of money where I'm like, this will be a really interesting case study. And then I just had
Yeah.
to make sure I covered the bases like taxes. A lot of people don't think about that part. And I went, wait, this is non-registered and I got to make sure I don't
All I
get,
think about are taxes. It
of course you
hurts.
do.
It's part of my job, and it's part of what I do.
Imagine
I, I had
accountant.
a good I had a good professor in university, and he hates tax so much, and he's like, it's made for the rich to get richer, and he kind of taught us all the loopholes and all the BS. So I'm a little jaded. I'm coming in negative to begin with.
Well, I'm happy you're thinking about taxes, man. The accountant should be. I'm trying to learn it. Like that's one thing I think about. Like there's a couple things I always wish they taught in school. Like they teach you it's fine learning about rocks and geology and whatever. But like if you could like that's all I remember from high school. But if I graduated grade 12, like just high school, and I knew how the stock market worked, I knew how index funds work, if I knew like how to manage taxes, how to manage credit cards, all of that.
Credit score, debt, credit cards. Like it's, dude, I started university. I signed up for a credit card. Like, what? What's happening?
Should that not be in itself like it's been a long, I'm 39. It's been a long time since I've been in high school. But if there's some sort of like course that you are forced to take, like there's these courses that you have to take to graduate. If that was one of the courses, like financial literacy course that every kid had, I guarantee you, if that was mandatory, by the time you graduate, the amount of millionaires in North America would skyrocket over like everybody. Because I always say this, I realized that if I just worked at McDonald's from the time I was 18 and invested in the S&P 500, by the time I'm not right now, 39, I'd be a millionaire by just maxing out my TFSA.
That's
Working
crazy.
working at McDonald's the whole time. It's like I've done all this other hard stuff. I could have just worked at McDonald's if I didn't know that. If I didn't know, I only know about it because I got in advertising, taking on clients. I had to learn about the stock industry. That's the only reason.
It's heartbreaking because we need to learn. They need to learn about budgeting and just like not spending more than what you own. And what's crazy is sometimes I'll see people. Um, I don't know. I don't want to turn off the fans like from the way or like your audience from how I talk, but I hire a lot of staff. I have a lot of people that work for me. I'll hire someone. I know how much they make, and I'll see they have like a $2,000 jacket, and it's like, yo, you cannot afford that. And then they'll want, this one girl I hired. She wants like a new Audi because like she got a pay bump when she started with us. I was like, dude, do not like pay off your car. She had the Volkswagen version of the Audi that she wanted. She didn't realize that Audi Volkswagen are kind of the same. You're buying the same car with a different badge. You're
Yeah.
paying 30, 40,000 more. I want to help people. I love being involved in people's budgeting and their personal finance. I see people making mistakes all the time, and I just want to tell them, hey, you're spending $2,000 on an iPhone Pro Max. You don't need it. You're not a content creator. You don't even make that much. Don't do it.
I How often do you talk about that on your channel? That just being like common sense, stop living outside your means. I did a video on it, one video. I did one video on my channel and I realized nobody gives a shit. Just tell us how to
Nobody
make money.
watches.
No, it's one of my worst performing videos. And for mine, I was like, oh, this is what I actually, because this is the one thing that moved the needle for me the most. Once I figured that part out, that's how I got rich. It was like living a couple notches below my means. I always did that. And I was just taking all that money I was saving from living a little poorer than I probably should be, and then investing it all and doing everything with it and not giving a shit if I look cool or what people thought or trying to be like hip in society and what other people thought. Like I never cared. It was just like, I gotta save money. I had debt. I had $40,000 in debt. I had to pay that off as fast as possible coming out of that hole. And that I shared that. Nobody cares. There's like, what stocks do I buy to get rich? I'm like, you can't even buy the stock if you don't have an emergency fund. You're going to pull money out of it, right? What's the point of buying VFV if you have to sell it in 2 years, right?
Dude,
Pay
I
something.
love that. I love that you brought that up because I made videos back at the beginning of my channel. Like, here's how to read financial statements. Here's what the balance sheet and income statement means. 100 views, even
Yeah.
like nobody watches it. No
Yeah.
one cares to learn. Everyone wants to learn. They say they want, oh, how do you do this? I'll make a video, and then no one watches it. They
Yeah.
only want the final answer. I'll be
Yeah.
like, hey, here's how to analyze the stock. Here's how I pick my stocks. Nobody watches it. They only care when I say, here's what you should buy. I've already done it. You should do it. Like that's why I created my course. Like I have a personal finance course. I don't know how to market or advertise it. Like you shouldn't look at it. You won't like it.
I did
Um,
look at it, actually. I was going to
I,
ask you
I
about
hate I hate it so much. I haven't spent the time to fix it.
Yeah.
Just the advertising for it, but
The product is
have
good
eight
though.
hours. I like the product. I have 8 hours of videos for teaching people from a beginner to an intermediate level of finance.
I'm going to show that on the screen here, guys, right now, because I actually was looking at it and I want to talk to you about it. So you guys will probably see some sort of screenshot overlay of that. And it just gives people everything they need, right? Basically, all the financial literacy, all the tools they need to, I guess, invest responsibly as well.
Yeah, it's like it's budgeting, understanding credit, how to fix your credit, how to find it, how to open an account, and I even show tutorials how to buy your first stock on Interactive Brokers, Questrade, Wealthsimple, and I think I use Scotia as well. I use my friend's account for Scotia. I try to keep it as basic as possible, and near the end, it gets a little more intermediate where I'm going into financial statements and I explain everything to you. I spend 30 minutes reviewing a company and teaching you what to look at, what it means, what you should look at. I tried, I should be adding to it continuously, but with all the other ventures I haven't been growing the course. It's
Yeah.
only 8 hours long. I want to get it to like 10 at least.
Yeah. Yeah. Cool. I'm going to check out that course too. I'm going to check out your content. So, um, but going back to that other point though. So like we both made content trying to help people be financially responsible. It both tanked. I literally have a video too as well. Like when I bought that meta stock, I wrote a video of like, here's why I bought it in detail. I explained how I picked that as my stock. Two of my worst performing videos was how I picked the stock in detail and how I basically got out of debt and financial planning. And then, like the part of the thing is, when you're creating YouTube content, you want to provide value. What you think is valuable. I know that the ones I think are valuable, I'm like, this is valuable. But then you also know if you do a video called 3 ETFs that'll make you $5 million, that'll get way more views. And it's just like, buy this, buy this, buy this. It's like, how do you balance that on your channel? Because now I've sort of resigned to the fact of, all right, cool. Once a month, I'm going to put out something like for viewers, just for like, here you go, soft serve ice cream. But I'm going to do this one. It's going to get 200 views that I'll have peace of mind that I put this out going, I gave someone out there is going to find real value in this and leverage this into some real actionable insights. So I go 200 views once a month and then, 10,000 views once a month, rather than just only doing the 10,000 or only having a dead channel of 200 video views. Cause you can't just do that. Nobody will watch your stuff.
Yeah, I feel like I have the dead channel right now. So I consider my YouTube channel like I consider it a failure. I've been doing it for 5 years now, and like it kind of hurts only having 35,000 subscribers. Like I'm clearly doing something wrong. I'm not sure what it is. Like people just tell me to do clickbait stuff, which I don't want to, so I'm not doing that. Um, I try to. I don't know. I'm not sure what. This doesn't clearly answer your question, but
Let's talk about that. I want you to talk about that. And I don't care if people aren't interested. This is interesting to me. Okay. I want to know, are you okay revealing sort of what your growth rate and stuff is at YouTube? And I can follow up with questions
yeah,
like,
it's very bad.
what
I get
do you get a week for subscribers right now?
I get I get 10 subscribers a day, no matter what I do.
Yeah.
If I do 3 videos or I skip a week, I'll get 10 a day. I don't know what I'm doing right or what I'm doing wrong. I used to pay. So I emailed Canadian in a t-shirt. I was like, hey, I'll pay you whatever you want. Can you just like look at my channel, just tell me what I'm doing wrong? I don't think he got back to me, which is fine. I'm paying other people like, hey, what am I doing? I don't know what it is. Maybe my thumbnails are bad. I tried to pay people for thumbnails. It didn't work. One thing I'll never do is like do the clickbait fake titles. I'd rather not be successful than do the fake stuff. Like Graham Stephan, he has 300 videos saying the market's crashing when the market has doubled since he's been saying that. He's just BS, and I don't think he should be saying that. And then he says he's not a financial expert. There's not financial advice. Yes, it is. Mm-hmm. You are clearly a financial expert. You make $10 million a year. You are giving financial advice on every video. So it's such a cop out, and I'm not that guy.
There's a couple things. So your titles are actually fine. Maybe like make them shorter. That's the only thing. We'll just make them a little bit shorter so they don't get cut off on mobile. I remember, guys, I have a marketing background. I am a licensed marketer kind of guy. I should be talking about this. So it's more relevant that I talk about this actually than investing, because I know
I'll take any tip.
So I'm going to break down Bassim's channel, and I'm going to help him break whatever thing he's in. Because right now I get I've only been really working on my channel since April. All right, so that's why my channel went really quick in April, and that's why you'll notice suddenly in April I'm a guy who went from like 100 subscribers to now I'm at like 2.5K in a span of like 2 months, from like a no channel to that. But it's escalated from 10 people a day to maybe like 10 people a week to now I get around 500 to 600 a week at this point. It's something it's ridiculous. It's gone ridiculous now at this point. I was at 1,000 subscribers a month ago, 4 weeks ago. Now I'm at 2,500. So it's 1,500 in 4 weeks, right? That's something. Awesome. But now here's what I've clued into now. Steal it all, because we're all friends. There is no competition in this YouTube space. There's enough room for all of us. I want Bassim to blow up. And if you blow up, people come back and check out this podcast with me doing it with you. So be like, yeah, Gary talked to him. Okay, everything is fine. You know the thing with Canadian and US investors, I've noticed, Canadians, Marcos Mila is my second guest on my channel. He's a US ETF guy. He's got intros that are like a minute and a half of like getting people hyped up, and then they watch it. I feel like American investors want to get like hyped up, but Canadian investors, where me and you live, just give us the goddamn information. I clicked on your title for information, and when you have those like crazy titles, you know, the ones that are clearly clickbait, I have a lower click-through rate than when I just say what it is. Top 5 ETFs for insane wealth, good enough. That's all you have to really say. I have insane in caps, just something to make the eye stop and see it. A little bit of clicky baitiness to it, but not like crazy, like the world's going to end if you don't buy this stock. Canadian investors actually don't like that bullshit. They're actually more like, just be honest with us, be authentic. Just what am I about to click? Great, deliver on it within the first 30 seconds. I noticed if you don't start talking about the thing that they clicked on for within 30 seconds, your retention drops. So look at what is your click-through rate on your thumbnails. Would you know roughly a percentage that you see? What's the number you see all the time? Okay, so I have roughly, lowest I'll get is 6, highest I'll get is 12. So you want to stick between 6 to 12%. That's what you're optimizing for. But you don't have to get super, super complicated. Only thing you have to do for and I've been noticing this, is maybe less text on your thumbnails. You have like 7 words at times. Try to stick between 2 to 5 words, because people are viewing on mobile a lot of the times and they're scrolling really fast. And it's not that anything wrong with you. It's just, how do you get the eye to stop? You just need the eye to stop. And I've hired thumbnail designers and I've done them myself using Canva. My garbage ones on Canva have outperformed the super polished ones that I've had editors do for me. So
I've paid a lot and they don't do well.
Once again, people resonate with super polished means you're about to lie to me. When it's clearly you did it, it's like, okay, yeah, Bassim, what's he up to? There's stuff, the only thing you have to do, and I made this mistake, is stick with the same theme across all the thumbnails. Like, so people, their eye notices it's you right away. I change them all the time because I'm always testing stuff to see what works. So I do for a reason, but find a template that works for all your videos. So then people will automatically see the template first, the color scheme or whatever it is. Stop, see that, see your face, see the 3 text. Within that millisecond, they know what they're about to watch. Title validates what the thumbnail did. Click. Within the first 15 seconds, you're already delivering on what you promised on the thumbnail and the title. And that's it. And you don't feel bad about it because you don't create bad content. Bassim's channel has all high quality content. You go there, you learn something, right? So there's none of that. So everyone's happy. You're happy. You got more viewers. Viewers happy because they actually got the information. All I'm doing right now is just making sure that everyone can find you, right? So even people listening I'm not giving him like a evil way to convince people. It's like, no, this guy's got great stuff. He's just getting lost because there's a million uploads on YouTube every day. You guys, we all know this. We're just going through thumbnails really quickly. How do you get people to stop? So on your titles, in full caps, get one word always in full caps. Those convert the best. And use a anchor word like insane, massive, something when you're talking about a portfolio of some sort. Just put that one word in there and then go to thumbsup.tv or something, thumbsup.co or something. It's basically a place where you can test. Let me just double check it. I can thumbs up.
We're just trying to look it up right now.
Thumbsup.tv. Wait, sorry guys. Hey, everyone's getting a marketing lesson. Okay, THUMBSUP.TV. This is good for anyone who wants to do YouTube, anyone who has any service-based industry, anyone who wants to do anything. Listen to what I'm saying. Go to thumbsup.tv, drop your image for your thumbnail there, put in your title, and what it'll do is it'll generate it across every device. And you'll see if it gets cut off. You'll see how it feels, right? And you'll just be like, would I stop and look at this? So I'll create 2 or 3 thumbnails and go, would this make me stop? And then I pick the one that immediately gives me an internal reaction of that's the one. But then if I don't get results of 6% or higher click-through rate, immediately I switch out my thumbnail. Now you have 36,000 subscribers, which means you know your subscribers immediately click on your thumbnail, right? They're the first people to see it. If you don't have a click-through rate of over 10% in that first couple hours, like from your subscribers clicking, you got something wrong with your thumbnail. Because if they're not clicking, then there's something up with it. So
I've never seen 10%.
It should always be. The first couple hours of my thumbnails will always be between 10 to 25% because it immediately goes out to my subscribers. It'll drop down to 6% once YouTube goes, oh, they liked it. And then it goes to a broader audience. With broader audience, they don't know who you are. Then it starts dwindling down to 6, but it should be at least 10% minimum. So you need to just start changing out these thumbnails and do this. Literally do this. On my frame, you're to go like this. Just go like this. Look, and then basically 3 words, 3 ETF portfolio. And then there's some cash here. Or there's a pie chart, 2.2 million. Something simple. And then punch up the saturation if you need to on stuff. So it's eye pops. But only have a couple colors oversaturated. That's it. So now, guys, I know I'm talking a lot, guys, but he came on the podcast. Got to help a brother out. I'm a marketing guy. And what do you need to get the views? You need the high click-through rate, people click. You need that retention in the first 30 seconds, right? The retention will be you making sure you deliver on the content within the first 15 to 30 seconds. You've been like, you clicked on this thing and you deliver on it. Now, one thing you can actually work around, and I've learned this too on doing YouTube, the more niche you talk, if you like TELUS raises dividends 7%, time to buy this Canadian telecom stock. Very long, very specific people looking for that. You're never going to get 40,000, right? Only way you get like 40,000 views is if you have 500,000 people. So just by a number game, like 500,000 subscribers, you're going to get that amount of views. So just know and manage your expectations when you make content of what you're going to get, depending on what kind of title and topic you choose. So now whenever I make content answering user questions, I go, and I have way less viewers. I'm only gonna get like 500 views on this. The last bunch of my videos have been literally answering people's questions and me making videos on it. I want to serve the audience. I'm like, I don't care about views. But then I know that I'm going to release this podcast with you. This will do well. I have a couple of ETF portfolio videos. Those will do well. Those will make up the difference. But I kind of weave those in. And then and you're pretty active in your community, right? You probably talk with everybody and comment on everyone's stuff.
Yep.
That helps a lot as well. So what else could I tell you about that? It would be change your thumbnails a bit with just less words on it. Try to think of a way to make your titles shorter and punchier without going clickbaity. You don't have to do that. But your setup though of you talking with text on screen is all you need for financial content.
I think so.
The more gimmicky you get, the less is just like, what are you doing? People don't care about that. It's not like a Mr. Beast video. I think people try to fall into that trap of like trying to make stuff like that. You just don't need that. How often are you releasing? You're releasing every week content?
So I was doing every week up until 2025. So I'm at 350 videos and I've run out of things to say. So now I'm doing every other week. I don't have, after 350 videos, I don't know what else to say or tell you. I'm becoming repetitive. It's not enjoyable for me. And I think people notice it and people kind of comment like, hey, you already made this TFSA video 3 years ago. So yeah, I think once I find a groove again, I'll go back to weekly, but I think I'm going to do every 2 weeks right now.
You gotta remember when you're doing repetitive, I haven't been doing this long enough to get repetitive yet, right? I'm not 350 videos in deep, so you're in a different problem. But there is a Stan Lee, when he would write Spider-Man comics, every comic book, he would start with Peter Parker. He's a teenage kid who got bit by a radioactive spider. His, Aunt May is his grandma and he lost his Uncle Ben. Literally the first page would be a recap of Spider-Man. every single page. And when he was asked about it, he said, I don't know if someone reading my comic book, this is the first time they've picked up a comic book. So I have to recap the comic book every single time because I'm assuming that whenever someone reads Spider-Man, it's the first time they read Spider-Man. I think there's no problem with you creating content that you specifically know is repetition, but you're specifically creating it for that person who just started investing that week, that month, and is actively seeking the content. Because what'll happen is if they don't come across your content, they're not going to come across your video from 3 years ago. They're going to come across someone else who posted a video that blew up that month or that week. And you provide value because you have a unique perspective on investing. You're highly accredited. You come from an accounting background. You got your real estate background. You know how to break down the data. You've proven you know what you're talking about inside and out. That I think it's doing a service to make sure you release that stuff at least every quarter. You designate, I don't know, let's say 3 videos where you go, I'm going to make sure I always kind of refresh on the basics of investing every quarter. And you're not doing it for your channel. You're doing it as a service to new investors to stay in top of mind in the algorithm. So you get found when new investors join the loop. Because, you know how easy it is to screw up when you start investing, right? You got to make sure the right people are the ones they're finding. You do not want them to find, I have nothing against Graham Stephen, but he probably has some crazy stuff that he tells people. There's a lot of people out there pumping stocks, saying crazy shit. I'd much prefer you staying top of the algorithm and they find you instead of some guy saying, here's how to make $1 million in 2 weeks, buy this stock. And you can only ensure that if you constantly schedule that out, it's at least a quarterly basis where you go, I'm going to put out some beginner investor stuff. Like I know every year I'm going to do a video on building a portfolio for your TFSA. Maybe when I know everyone's thinking about it, RRSP. Every year I'm going to put out a 3 ETF portfolio for beginners. Every year I'm going to do that no matter what. Not because I'm like, I'll get views, it's because I just need to add to the algorithm for that good content. And it'll always be good structured stuff. Like these are all safe bets, nothing crazy, right? Mm-hmm. Would you ever do content? Are you doing this now where you kind of give portfolio updates and stuff like that? Passive income does that. I'm going to start doing that a little bit more.
So I stopped doing that a few years ago because, again, like I just feel it doesn't help people. My returns are unrealistic. It doesn't, I don't know. A lot of people would comment, it's like, hey, we can't recreate this, or you're swinging a big stick. Like it's easy to make money when you're at 1.4 million or something. So I don't know. I don't want to turn people off. It becomes too showboaty at one point. Like I think in 1 year I went up 50%, and I can't help people recreate that. It doesn't help you at all if you don't see my 800 trades. I also stopped live. So now I don't post my live options trades anymore because I tell people not to follow me and then they do anyway. And here's the thing. I post a video from what I traded yesterday. The market is different now, so you can't recreate what I did now.
Yeah.
The certain percentages, the numbers went up and down. Everything's kind of different. A day went by. So yeah, there's a lot of reasons in that. I want to help people who aren't. Yeah, it just doesn't help you if I'm like, hey, here I made another 180,000 off options trading, but people can't recreate it. So I kind of thought maybe once a year I'll do a portfolio update. But also, like I moved the stuff overseas now, so it's not all in one cute little bucket.
Do you think maybe not focusing on the number value, but focusing on the why you do stuff? That's what I'm trying to pivot to. Is I try to, like when I did that little YouTube short, I said, here's why I sold Tesla. I told you the reasons why. I'm like, I just didn't, too volatile. I didn't even talk about how much money I sold it for, because I want people to understand the thought process behind investing. Do you think that could be some content where you go, all right, I just did this and here's why I did it, and you don't even talk about number values? Like it just, here's what I was thinking, here's what I was feeling. So I feel like a lot of people need to know that. It's like, we're not robots. There's a lot of back and forth in your head. There's a lot of weird things that I have rules that I have a set of rules that I stick to that are different from your set of rules, and just understanding that people have rules and people have different systems of doing stuff rather than the money. That's where I'm going with my channel. It's just like, here's how I think. Here's access into my brain and why I'm doing stuff. But you never, and it's always after the fact. I'm never gonna be like, I'm about to buy this because I don't want people to buy it. I'll do it like a week after, so you don't get into trouble. what about that kind of angle? I'd love to, because I'd love to hear why you do. I want to hear. I'm interested in why do you operate the way you operate?
That's a good idea. I could probably do that.
A weekly thing.
Yeah.
I would watch that. If you weekly were like, here's what I've been up to this week, and here's the moves I made, without talking about the numbers, I would be interested. I'd be like, okay, why did you do that? Okay, great. That's so different than the way I'm thinking. It just helps, because a lot of this is because you're trying to provide value and help people, right? And I think people, when they get past the beginning step, we kind of need to know why other people are doing what they do. Even for reassurance purposes. Jesus Christ. Sometimes you just want to know that other people are as crazy as you, or other people are as unsure as you, right? That helps. And I don't know if I necessarily agree where, like, when you go like, hey, I made like $400,000, that's bad. Like, everyone needs a North Star. We all have to go like, okay, that's possible. Like, it's kind of nice to know, okay, someone is working for this guy. Like, I'll talk about it on my channel because I'm just some guy. Like, if I'm pulling it off, I know you can too. I just have discipline. Like, that's like the prerequisite, discipline, and then you can make it work, right? Nothing special.
Yeah. It's just time, like building the streams of income. It just takes time. It's like not very sexy in the first few years. Like my first investment was $1,200 into a TD Bank. Like you're not making very much, but yeah, time. It looks good after 10 years.
So when we're talking to new investors, would you just tell them to go the simple route of max out your tax advantage accounts right away, invest into like an all-in-one ETF or the S&P 500, stick to that, and unless you feel like you have a knack for it, or unless you're like really passionate about it, then start picking individual stocks and do stuff like that? Would that be the method you?
Yeah, definitely. What I like about Interactive Brokers is they have a paper trading account. So they could give you a dummy account with $1 million. And then if you want, try your own stock picks there with fake money before you go into real life. So I like that idea. So pick the market, and then on the paper trading, pick your own stocks. And then if you outperform after a year or 2 years, or if you think you know better, you have a direct comparison right there. Put 30,000, or okay, let's say put 5,000 into your TFSA, and then put 5,000 into the Interactive Brokers paper trading, and then see who does better. And it's a big learning lesson. So don't use real money.
I still want to say though, it's not the same as the real thing though, because I don't want to use this as an analogy, but gambling, when you play with fake money in poker and then you play with real money in poker, it just feels different when you have something actually on the line. So it's like when you're actually using your money, you invest differently when you know you could actually lose it than when if it's imaginary money.
Yeah. But it is interesting. Let's say at the end of 1 year, if you put 5,000 real money into TFSA, into the S&P 500, and then 5,000, and then you played with it, and you see one went down to zero.
Yeah,
and the other
that's
went
good.
up. Yeah.
That's good. All right. Well, I think that'll wrap us up for today. Thanks so much for talking to me. And guys, check out his channel. This is dense information, everything you need to know about investing. Check out his course as well, all the stuff. You'll see the link for his channel in the description, the first pin comment. Thank you so much for talking with us today, Bassim, and we'll talk soon.
Thank you very much. Thanks for having me.